Assalamu alaikum.
Aleyküm selam ve rahmetullah.
Wa alaikum assalam.
Assalamu alaikum, Amir bhai.
So we are going to start. Can I just request everyone to mute themselves?
Brother Syed, Brother Rizwan, we are not allowed to switch on videos.
You will be in a minute. Okay, so can we request everyone to be on mute, please?
Yeah, Mr. Rizwan. Can you hear me, Mr. Rizwan?
We can hear you. So we are going to begin, inshallah.
Inshallah, okay.
All right. So okay. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Nabiyyina Muhammadin wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. Excellencies, distinguished guests, my brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuhu, and a very good day to all of you joining us from Turkey and rest of the world. On behalf of Accounting and Auditing Organization for Islamic Financial Institutions, its co-organizers for this important webinar, Participation Finance Association of Turkey, TKBB, and Islamic International Rating Agency, IRA. It gives me an immense pleasure to welcome you all to this important webinar on participation finance regulatory framework in Turkey and AOFI standards. My name is Dr. Rizwan Malik and look after the standards implementation and strategic development here at Aofe. I would like to thank my colleagues at TKBB and IRA for extending their support in making this event possible. I would also extend my support to my in particular to colleagues at these institutions, including Sister Fatma, Brother Syed, Noof, Asia, Mona, and Hanan, in making sure that this event is possible. I would also like to thank all our speakers joining us from different parts of the world and sparing their time to be with us. As you know, distinguished guests, Turkey is a very important market for Islamic finance industry with a large population. The participation finance sector in the country is receiving support from both private and public sector, which has led to a strong growth. And this growth has translated into a market share on the banking side for about 7% of the banking industry in the country. And the government's strategic objective is to take this growth to about 15% by the year 2025. Of course, the private sector is very ably supporting the public sector in this growth story. From the regulatory front, there are a number of regulatory and supervisory institutions who are facilitating this growth. This includes the Central Bank of Turkey, Banking Regulation Supervision Agency, BRSA, or better known as BDDK, Capital Markets Board, SPK, Insurance and Private Pension Regulator, SEDDK, and KGK, the accounting regulator, and very ably supported by the Participation Finance Association of Turkey, TKBB. More recently, in February 2021, a dedicated department has been set up in the finance office of Turkish presidency to deal with the growth of this sector and further stimulate this growth by being an advocate of the industry in Turkey, and as well as develop strategies for further growth of this important sector. We understand that the department is currently working on the development of an Islamic finance regulatory framework, which more details on this framework and other discussions we will hear from the deliberations today. So the aim of today's webinar is to hear some of these developments, and additionally how Aofe standards can play an important role during this growth journey for participation finance in Turkey, as it has done for other markets in different parts of the world. The flow of the program is as follows. There will be welcome remarks followed by two presentations, one focused on the private sector and the other focused on the regulatory developments in Turkey, followed by a presentation from Aofe on Aofe standards and the need for them. There will be a dedicated presentation on the need for enhanced ratings for Islamic finance. And this will be followed by a very important panel discussion on the forthcoming regulatory framework for participation finance in Turkey. The session will end at about 12:30 Turkish time or Bahrain time, inshallah. We have allocated, of course, some time after every session for Q&A, and we would request you to use the Q&A tab at the bottom of your screen to send out your questions for each of the speaker. Additionally, I would request everyone to stay on mute if they're not speaking. And if there are any questions, and if you would like to raise your hand and would like to ask question by voice, we may grant the permission depending on the time availability. So now, before any further ado, let me have the pleasure of inviting the Secretary General of Aofe, Mr. Umar Mustafa Ansari, to formally welcome you and deliver his welcome remarks.
Assalamu alaikum, Brother Rizwan. May I be allowed to start the video?
Yes, please. Do you not have the permission? Okay, you should be able to do it now.
Thank you very much. Thank you very much. A'udhu billahi minash shaitanir rajeem. Bismillahir rahmanir rahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuhu, and very good morning. Indeed, it's a great pleasure to be here with all of you, joining mainly from Turkey, but I can see joining from other parts of the world as well. To be honest, there is one small regret in this, that it would have been much better if the situation was good and we were able to hold this event physically. It would have been a greater pleasure for all of us. And we hope and we pray to Allah Almighty that these difficult times of this pandemic, alhamdulillah, we can see improvement, but still it's not over. I was just yesterday told that our brother Fahim also got positive. I don't think it's a good thing to say in front of so many people, but inshallah, all of us will pray for you, brother Fahim. I just came to know about it in the night, and we pray for you, and we pray for all humanity to get rid of this pandemic and the effects of this pandemic on the economic, social, and other aspects of life. I pray to Allah Almighty that we are able to resume our activities and everything in as soon as possible, inshallah, and we are able, inshallah, in our next event to sit together, meet physically, and talk to each one of us. It should not be like we are speaking in front of a screen only. With that, I would like to first thank our co-organizers, TKBB and their team, and IARA and their team, and my own colleagues and our team who have worked very hard to make this event possible. and to make sure that a very elite class of people actually become part of the panelists and become part of this event as attendees. I would like to say that Islamic finance is for the whole of Ummah, but the bigger countries and the more important countries and the bigger economies are responsible to take the bigger burden. And we are so happy to see that Turkey, being one of the largest Muslim countries, one of the largest Muslim economies, and to be honest, largest Muslim industrial economy, I believe. As in this position, we can see, and we are so happy to see that, Alhamdulillah, the Turkish government has been positive about it. Turkish regulators have been positive about it. Islamic finance is showing a growth in the country. The participation finance is becoming a norm. It was, for sure, it existed in Turkey for quite some time, but it was a very small niche market. Now we can see, and we hope that inshallah it is coming into mainstream, and we hope inshallah it will become the prominent and the first banking and finance choice in the time to come. I would also like to mention that Alhamdulillah, Turkey is blessed with so many of the resources from Allah subhanahu wa ta'ala, but one of them is the human resources. Very learned, committed, educated people. We, Alhamdulillah, are getting benefit in Aofe in different boards. And I'm so happy that inshallah, our members of our board of trustees, our board, our accounting board, our governance and ethics board, our public interest monitoring consultative committee, those members who are representing Turkey at Aofe boards and committees, I can see, Alhamdulillah, that they are joining us in today's event as well. And this gives actually an indication about the importance of Turkey for Aofe, importance of Turkey for Islamic finance, that as to how and to what extent Turkey is supporting these whole initiatives, not only in the capacity of the associations and institutions, but also in the capacity of very learned individuals. I will not take too much time. I just wanted to thank you all individually, collectively, for making this event possible. And I'm looking forward for a great exchange of knowledge, views, opportunities, and areas to further collaborate. With that, thank you very much, and see you in my upcoming presentation later. So I have a lot of things to discuss. Inshallah, those things will be discussed when I will make my presentation. Thank you again. Assalamu alaikum warahmatullahi wabarakatuh.
Thank you, Brother Umar, for delivering the welcoming remarks. Now I would like to invite our partners and co-organizers.
Selamun Aleyküm.
Osman Bey, aleyküm selam. I think there is an internet problem
Evet.
at Rizwan's connections. Floor is yours for your opening remarks.
Okay. Can I start?
Yes, please. Yes, please.
Okay. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, distinguished guests and esteemed colleagues. Welcome to Participation Finance Regulatory Framework in Turkey and Aofe Standards webinar. We are pleased to meet you at this event
organized in cooperation with Aofe, International Islamic Rating Agency, and TKBB, and participation of valuable stakeholders of Turkey's finance ecosystem. With the support and increasing interest showing to the participation banking sector by both private and public institutions, Turkey is becoming an important actor in the global Islamic finance and banking sectors. While the share of participation banking sector in Turkey exceed that of 7.5% in the terms of asset size in the banking sector, this share is targeted to be 15% by 2025. In this context, Turkey has initiated development in the banking sector with legal and regulatory infrastructure projects in recent years and has carried out many new initiatives by including new institutions in the sector. In Turkey, financial architecture of Islamic finance sector is developing with establishment of sector-related departments in existing institutions, as well as increasing capital through insurance, capital markets, and capacity building activities. The advisory board of TKBB, which is the central Sharia board, is a committee formed under the association with the decision taken by the board of directors of Participation Banks Association of Turkey in May 2018, in line with the decision of Banking Regulation and Supervision Board. The decisions and standards of the board have a binding nature for participation sector. In addition to regulatory and supervisory institutions such as BRSI and KGK, Finance Office, Presidency of Turkey, and the Central Bank of Republic of Turkey, together with the association, play a leading role in the development of participation banking sector in the country. Within the scope of MOU made with Aofe, support and guidance studies are carried out in standard setting and capacity building in order to accelerate the development of participation banking sector in Turkey through activities held with Aofe. The book titled Interest-Free Finance Standards, which includes the 58 standards of Aofe dated 2015, was translated with the coordination of association and provided as an useful resource to all parties, including universities and industry stakeholders. At this informative webinar, it will be possible to discuss professional principles and standards for participation finance sector in order to support the further development of the sector in our country by bringing together important stakeholders from Turkey and from the world. I would like to thank you once again for your valuable participation and wish all of us a productive and enjoyable webinar program. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa Indeed, we thank you, Usman Bey, for extending your support to this important cause and leading the association with a well-rounded from all angles in that sense, and with the support of the regulatory and supervisory institutions in the country. I think the growth is very importantly led by yourselves as an association. So we thank you also for the support in putting together this very important event. And inshallah, we look forward to this continued participation, continued collaboration with TKBB for the development of Islamic banking and finance industry in Turkey and globally, inshallah.
Thank you so much.
Thank you very much. Swiftly moving on, I would like to share or extend the floor to our first presentation, which will be delivered by the chairman of the Central Advisory Board at TKBB, Professor Dr. Hassan Hachak, who's actually a Sharia scholar, as well as in addition to being a chairman of the Central Advisory Board of the Central Sharia Supervisory Authority at TKBB and Turkey in particular, he's also a Sharia board member at International Islamic Financial Market in Bahrain since 2018. Additionally, he's also the head of Islamic Law Department at Marmara University. I have been very fascinated to learn the work that he has been involved in particular in his interest in theology as well as Usul al-Fiqh, and he has translated a lot of work of Ghazali, and that's where his interest remains. Inshallah, he will share with us some of the development of the private sector and in general the development in Islamic banking and finance industry in Turkey. And inshallah, if there are any questions, please use the Q&A tab for those. Thank you very much. Professor Hassan, the floor is yours, inshallah.
Thank you very much, Sayyid Malik. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين الصلاة والسلام على رسولنا محمد وعلى آله وصحبه أجمعين. Dear Chairman, respective panelists and distinguished guests, I am very pleased to have the opportunity to meet with you and to give you information about the Central Advisory Board of Turkey at this webinar, prepared in cooperation with Aofe, IRA, and TKBB. I would like to express my gratitude to all institutions that contributed to the organization of the program. I would also like to welcome all participants and audience joining us at this webinar. I believe that this important event that brings together local and international Islamic finance ecosystem stakeholders will be beneficial for all of us. Today, I will try to introduce our Central Advisory Board, which was established in 2018 under the Participation Bank Association of Turkey, TKBB. TKBB is a Turkish abridgment, and to explain the importance and activities of this board in the institutional architecture of Islamic finance in Turkey. I am Hassan Hachak, and I have been working on the advisory board since its establishment in 2018. I was the vice chairman of the advisory board for the first 2 years, and now I am acting as the chairman. I would like to point out that our advisory board is actually the central Sharia board in Turkey, but it is common practice to call it advisory board or central advisory board due to Turkey's unique conditions, just as the name of participation banking is preferred in Turkey instead of the term Islamic banking. First of all, let's talk about a little bit Sharia governance ecosystem before the advisory board of TKBB. Islamic banking or participation banking started in Turkey in the 1980s. Participation banks had advisory or Sharia committees operating within their own structure and within their hired personnel. And the decisions of those committees were only binding their own institutions. There was no unity in application of the standards due to the multi-decisions, and it was causing confusion among the customers. These differences began to emerge between the understanding and practices of participation banks over time. And when we looked at the customer feedback, some practices of participation banks in Turkish society began to be questioned, and a trust issue began to emerge. Even unfair competition conditions emerged from time to time. Finally, with the initiative of the Banking Regulation and Supervising Agency, which is BRSA, a central advisory board was established in Turkey at the beginning of 2018. What is the main duties of the advisory board? The main purpose of this board is to determine the standards for the transactions to be made in the field of the participation finance in Turkey. When deemed necessary, taking general decisions to eliminate the practice differences among participation banks. And the other duty is, upon application, providing opinions and participation financing activities to institutions. And organizing programs and preparing publications to train and publicize the professional principles and standards of participation banking. Let's talk about the formation of the advisory board of TKBB. The advisory board of Participation Banks Association of Turkey is a committee or is a board formed under the association. When I say association, I mean the TKBB, with the decision taken by the board of directors of the TKBB on 2018, in line with the decision of the Banking Regulation and Supervising Agency, BRSI, date 2018. The advisory board carries out its administrative and scholarly activities based on the communique on the formation, duty, working procedures, and principles of the advisory board, dated 2018, and the internal directive on the working procedures and principles of the advisory board, dated 2018, both of which were adopted by the board of directors of TKBB. And our advisory board held its first meeting on May 2018. To know our advisory board in general, I want to show some basic features of advisory board. First, the advisory board of TKBB is an independent board established under the umbrella of the association. It is just under the umbrella of association. It's totally independent board. The decisions and standards of the board have a binding nature for participation banks. That is very important feature. And I think our third basic feature is also so important because we are new in these issues. I mean the determining standards and producing standards. We have to work very hard. And this third feature is that although the minimum meeting frequency of the board is 1 month, usually it meets 1 full day in every week to compensate some things. We make full-time, full-day weeks in every week. Yeah. What is the general methodology of board in determining standards? Yeah. Here I would like to briefly touch on fiqh methods and principles of our advisory board in producing fatwas and standards. We can say that our advisory board gives more priority to the principles and procedures of the Hanafi method, while making use of the wide perspective of Islamic law and examining the views of all methods for producing standards and making decisions for financial transactions. Excuse me. For this reason, it can be said that, or this is my personal opinion, it can be said that our board mostly acts in accordance with the logic of the Hanafi Mezheb or Ehli Rey in the history of the Islamic thought. Likewise, the historical background, understanding of Islam and cultural structure of this society also require this. One another point, I can say that our board thinks that the way we call fatwaism is not always the right way. Fatwaism, this is my terminology, is to try to solve an issue with a single sentence or a fatwa or a single hadith, Habar al-Wahid, rip it off from the classical text without making the necessary investigation and focusing just fatwas, not to the theories and jurisprudence. Instead, I think this is my observation, this belongs to me. Instead, the board strives to take a more academic path and avoid transactions that would make Islamic finance a bad imitation of traditional banking. So, our method, in a nutshell, is to try to establish a balance. On one side of the scale, there is the principle of sectors' necessities, and it is not being blocked. And the other side, there is the concern that Islamic finance will not be a bad imitation, and the principle of preserving its originality. Let's talk about the members of the advisory board of TKBB. The board consists of 7 members who serve for a period of 5 years. It is mandatory that 4 of the members have a PhD in Islamic sciences. One of them should be proposed by the Presidency of Religious Affairs, who is among the members of the High Board of Religious Affairs. One of them has an undergraduate or graduate degree in one of the business, economics, finance, banking, law, or equivalent disciplines, and at least 7 years of managerial experience in the participation banking field. And the other one has a law degree. The current members of advisory board of TKBB is like that. Professor Dr. Hasan Acar, the board chairman, that's me. Professor Ertuğrul Boynukalın, deputy chairman of the board. And Professor Dr. Abdullah Kahraman, Professor Dr. Ahmet Yaman, Professor Dr. Sanar Duman, and Docent Dr. Abdurrahman Savaş and Temel Hazırol. Yeah. And we have a secretariat of the advisory board. Our secretariat consists of 5 researchers, yeah, which is Ali Öztürk, Mehmet Yuşa Solak, Dr. Mustafa Sancar, Esra Taşkesen Sancar, and Cengiz Bay Murzaya. One of our specialists has completed his PhD studies in the field of Islamic economics and finance, and the other specialists are preparing their doctoral thesis, PhDs, in the field of the Islamic law. They are full-time, and we plan to increase the numbers of our specialists. I think I consider our advisory board like a school or like a college or university. We try to increase the numbers of our specialists to make it more efficient, inshallah. Here, let's talk about our standard development process of the advisory board. First of all, we determine the subject of the standard. Which standard we will prepare, we determine that. We assigning a board member and a specialist for preparing the draft of our standard. After this study, we have a initial standard draft. We update the draft by studying on this draft on board, and we study on this draft and we finalize this draft. After that, we send this draft to our stakeholder institutions for revision, and we collect their revisions, and we evaluate these revisions, and we organize a workshop on the standard or draft standard. All stakeholder institutions, universities participate in this workshop, and after this workshop, the board members give the standard its final form, and we submit this final form to the TKBB, and after that the TKBB deal with the publication of the standard, and also on the website there will be a publication. Standards of the advisory board of TKBB. The board has 3 standards published currently. The first one, share certificate standard. The second one, Tavarruk standard. The third one is Murabaha standard. And we also about to finish the Surety Kefale standard, and Mudarebe, Mushareke, and Vekale standards are aimed to be published in the period of 2021 and 2022 period. Also, there are some decisions produced by the advisory board. The board currently has 29 decisions. 12 of them have been published on the website. Also, our standards translated into English and Arabic, that is also published in our website. Yeah. I want to deal with some important issue in Sharia governance and certification programs. Sharia governance, it is the compliance of institutions operating in Turkey and their personnel within the principles and standards of participation banking, is the subject of particular emphasis. It is very important that the standards of the Central Advisory Board are understood correctly, and that our bank personnel communicate these issues correctly. In this regard, TKBB and MÜİSEF, which is Marmara University Institute of Islamic Economics and Finance, are carrying out a certification program that will contribute to the human resource development of the sector and standardize the activities. This program, which was started in 2020, was repeated this year. Thank you very much for your listening. Salam alaikum.
Wa alaikum assalam tullah. Professor, thank you very much. I think a very detailed presentation on the work that the the Central Advisory Board or the Central Sharia Supervisory Board is undertaking at TKBAB, being an independent institution. Thank you very much for sharing the detailed presentation. There were a couple of questions for you, but they have been answered. So if there are any further questions that come about, that we will, if you can stay online after Umar Bey's presentation, then we can request you to answer them as well, if time permits. Now, in the interest of time, swiftly moving on, Professor, if you can kindly stop the screen share, please. Thank you. Swiftly moving on to our next presentation, which will be delivered by Brother Umar Chekin from BRSA, Banking Regulation and Supervision Agency. Brother Umar is a very experienced regulator of more than 15 years experience working for BRSA. Currently, he is heading the Participation Finance Department at BRSA or BDDK, as well as heading the Foreign Relations Department at the institution. BRSA is behind a lot of developments that happen in the participation finance in Turkey, and all is ably supported by a very knowledgeable and experienced team. Brother Umar, among other things, he's also he's part of the technical committee, as well as he's a chairperson of the corporate governance working group at Islamic Financial Services Board. So he will share with us some of the developments from a regulatory perspective with our audience, and inshallah, we look forward to an interesting presentation in the light of a lot of the regulatory developments that are happening in the country. Brother Umar.
Thank you, Mr. Rizwan. Thank you for all. Assalamu alaikum wa rahmatullah. Hi, everyone. Greetings from the Banking Regulation and Supervision Agency to all highly respectable audiences and the panelists. I'm very proud of being invited to such an influential, important webinar program. I would like to thank to Aofe, Participation Bank Association of Turkey, and also Islamic International Rating Agency. Because I'm very grateful to find such a good occasion to tell, as BRSA, what we have done for developing participation finance in Turkey. This is really good occasion. I see a lot of people participated to this webinar program, and from abroad also there are a lot of people. And as Turkey, we try to be the one of pioneer country which is coming to people's mind whenever talk about Islamic finance. Actually, we have limited time, and I want to skip direct to my presentation for not spending my limited time with the introductory part. Before talking about the recent regulatory changes, let me illustrate to historical regulatory turning points, especially for the audience who are not familiar with the sector. I see there are a lot of people from different countries. This will be very fruitful for them to understand the regulatory framework of the sector in Turkey. We can say legal history of the sector started in 1983. Of course, before that year, we see some of examples, but they are not legally regulated examples. And then we can say just the beginning point of the sector is 1983. This was not the law published from the parliament. This was just a cabinet decree, and those years the participation banks were calling as special finance house. After that year, as far as I know, 5 different special finance houses established and operated in Turkey till 1999. And special finance houses became subject to the banking law in 1999, the number 4389. But in this law, as I said, they were not categorized as the banks, as one of the bank type. This was also, they were also special finance houses. But the year 2005, the special finance houses became banks, one of the bank type, with the banking law number 5411. After that year, Participation Bank Association of Turkey established, and it is steadily published in the official gazette. And in 2014, the main changes in the regulatory environment of the sector started with the 10th development plan, because as BRSA, we took some initiatives to put some actions into this development plan. There were 31 actions, and one of the actions was establishing specifically in charge of participation banking department within the governmental bodies. And as BRSA, we fulfilled these actions, this commitment. And in 2005, we established the specifically in charge of participation banking department. And after that year, the regulatory changes, regulatory amendments accelerated within the BRSA sub-regulations. Actually, I want to tell you, in that year, after establishing the departments, we started to prepare a draft law, a law for specifically participation bank. But in 2015 and in 2016, in those years, the conditions are not enough nature to be accepted by the sector and also by the ministry to submit the draft law to the parliament, and this draft law put into the drawer. Actually, we accelerated our amendments as the BRSA in our sub-regulations, and we differentiated as much as from the conventional counterparts in our sub-regulations. And also we published some two different new regulations for specifically for the sector. Actually, the recent 4 years, we accomplished many regulatory things, and I want to elaborate for the specialist, being for a good example for other countries. In detail, some of them. We can differentiate in two different titles, amendments and the newborns. First of all, we changed the banking law, article number 77, specifically for participation banks. In this article, for example, we, based on the differences of the participation banks, we give some we differentiated some of the articles different from the conventional banks. For example, the transaction executed on real estate commodities are not considered as the within the limit and the prohibition of such transactions for other conventional banks. And the second things which is very important for that, which is very important for the sector, is acquiring shares from the based on the financing customers based on the musharaka and mudaraba are not also considered within the as the subsidiary, and also within the limit and the prohibition for participation banks different from the conventional banks. And in 2018, maybe you remember in Turkey, we experienced a very small, to some extent, the liquidity crisis we experienced, but this was not actually, it was a liquidity crisis. Actually, the risk perceptions increased against a crisis, against having a crisis. Actually, we amended the deposit regulation of the participation banks through giving some one more option receiving deposits from their customers based on the agent, based on the wakala contracts. And after that, we actually, before we amended the credit transactions, there were some limited options for financing the participation banks to their customers, but we differentiate and we give all options, taking into account the global best practices and standards and the different regulations in different countries, and we differentiate their financing methods within the credit transactions. And very good example of our amendments in our regulations is interest rates in the banking book. You know, there are also the all kind of banks are should be compliant, should measure their interest rates in the banking book according to our measurements methods. Based on the sharing, risk sharing mechanism, we also differentiated the regulation between the conventional and the participation banks. The positions can be measured by the participation banks 50%, just 50% different from the conventional positions, conventional banks positions. And also in regarding with the other related with the other changes, we also changed our accounting plan, and also with some of extent we took into account AOIFI accounting standards through that way. And in those years, in recent 3 years, we also prepared through 3 different documents. One of them is the compliance communique, we say, and the second one, informing customers communique, and the third one is the guidance note on corporate governance for participation banks. The first one is regulating the participation banks in terms of their Sharia governance system, and according to this communique, every participation bank should establish an advisory committee and should be conducted within the participation banks internal control and auditing, and also risk management. Like those things should be done in each participation bank. The second important communique is informing customers on informing customers communique, and this is I think I never seen the sample of in a different country this such an communique, such a regulation, because actually we give much importance to every customer should have the contractual minds in every transactions. But you know, nowadays the banks don't give much importance to those in their operations. But for example, if a customer receiving a financing from participation banks, he should get the idea, contractual idea, mudaraba or musharaka. Otherwise, the transactions would not be Sharia compliant, we think. The last document of the prepared by us within the BRSA is the guidance on the corporate governance for participation banks. Those 2 documents has not been published yet, but in a very short time, the participants will see in our website, and also guidance note will be published the Participation Bank Association of Turkey. And what is our upcoming main reform? Actually, I want to talk about our main upcoming reform is participation finance law. This will be very influential for the sector. Actually, we were assigned with the finance officer presidency to prepare a participation finance law based on the strategy paper, namely 11th Development Plan of Turkey. And nowadays we have been working on that for a couple of months. And we, in the initial part of the work, we tried to determine and also reach an agreement between us to some crucial points. And we asked to ourselves some questions and try to find out their answers. And now today, I want to share with you some of them, not in detail. Of course, we are in the process of preparing this finance law, and before submitting to Parliament, everything can be changed. But some of main points I think I can share with you. Those can give you some the big picture of the finance draft law, participation finance draft law. What is the feature of this law? Actually, there are different law types according to in the literature. There are framework law, constitutional law, special purpose law, additional law. There are those different types, different law types, and we try to understand which type law will be suitable for the sector and for us for developing the sector. Actually, the draft law will include some additional provisions to the sector in their specific aspect of transactions. Actually, from that statement, we understand that this law will be additional and specific purpose law. Actually, this law will not change the system from the infrastructural level. And also the current financial institutions will be the same based on their regulation. Participation banks will be are being regulated same on the banking law, and additionally they will be they should be compliant. They should be compliant with this new law additionally. The feature is that. And the second one, what is our objective? From this law, we have actually the main objective, and also and there is an additional objective. The main objective is keeping Islamic financial institutions, participation financial institutions, and participation financial transactions compliant with the Islamic principles. This is our main objective, and we will establish some of mechanisms in order to keep compliant with Islamic principles. And the second objective is, of course, we are trying to develop the sector, and we plan to grant some incentives within the sector, not just taxing, and also some different jurisdictions under different governmental bodies, as BRSA, Capital Market Boards of Turkey, Insurance Authority, and also Central Bank. We will give some incentives to participation financial institutions and also participation financial transactions. What is the scope? Actually, scope is not just participation financial institutions, and it's also all kind of financial institutions in terms of their participation financial transactions. That is the scope. And what is the enforcement? The enforcement will be conducted by the presidency. Actually, you know, there are different subsectors in Turkey regulated by different governmental bodies, and that's why we decided to give the enforcement authority to the presidency, because otherwise it will if we give the enforcement authority to one of the government body, for example, the BRSA, it will be power exceeding between the governmental bodies. And also giving the enforcement authority to the presidency, it is also very important to give the message to the all stakeholders to we give very highly importance to this sector from the top governmental chart. It's also very important. Actually, this is the most critical part of the Law with Central Advisory Board. So actually, it is also established in 2018. We give some different. We also we regulate within the law the Central Advisory Board, and we will some extent differentiate it is features, it is decision mechanisms, and some in detail we are still we are still working on in the process on that in the process. We are still in the process. Thank you, Mr. Rizwan. That was all my what I wanted to tell you to all participants. Thanks for interest and patience. As the BRSA, I am very thankful to you, to all participants and the panelists, and to Aofe. Thank you very much.
Thank you, Umar Bey. I felt the time to that sense. It was such an interesting presentation. Taking us through the historical development from a regulatory perspective, and then giving us what is happening, what is coming, in the next few weeks and months for the participation finance industry in Turkey. So we are very much looking forward to those developments, and we wish you, being the nucleus of all these developments, we wish you the best in terms of putting together these important developments, and hope that with the support of the ecosystem that the country has developed, and the subsidies and the incentives that we are going to introduce, it will be beneficial for the industry and give it a push in terms of its growth. And I think we are very much looking forward to that. So really, thank you very much for sharing some interesting insights on the history as well as what is forthcoming. So I'm mindful of the time, but there is one brother who has raised a hand, and if Umar Bey, if you allow, I would request him to ask the question by voice.
Okay.
I think Brother Ubaid, would you like to ask your question? You're asked. You can speak. Brother Ubaid, if you're there. He's probably away. Never mind. So I think there's another question by Dr. Ilyas. Dr. Ilyas, would you like to ask your question?
Assalamu alaikum.
Wa alaikum salam.
Thank you, Dr. Razwan, and thank you, Mr. Omar, for your nice presentation. Actually, I want to ask about the regulation in the deposit, as you mentioned in your presentation. That the amendment happened. It is by the wakala contract. Could you please explain for me how it's working, and this is for the whole deposits in the Islamic banking in Turkey, or just for specific banks in Turkey? Thank you very much in advance. Thank you.
The last part of the question I couldn't understand. I'm sorry. This is just
regarding to this contract, wakala contract.
Yeah.
It is adopted for the whole banks in Turkey, or just for specific banks?
Yeah. Okay. Understood. Okay.
Thank you very much. Thank you.
Actually, in 2018, we gave the options. We gave the opportunities to receive deposits from their customers, for the participation banks. Actually, this is the critical part. They should differentiate the pools. Before than that, the participation banks could receive the deposit just based on profit sharing, just based on mudaraba. But after than that, they have two different options for receiving this deposit from their customers. And the critical part of this, just to differentiating the pools from the mudaraba pools to wakala pools cannot be transferred the money. Those conditions and then provisions we have within the regulation. You can find in our website the English version, the regulation about wakala deposits in our deposit regulation. You can find in very detail. And actually, the second part of your question is actually this is just for specifically for participation banks, of course. For the conventional banks, they don't have any such an option. They can't get Islamic deposits, and they can't actually conduct window operations, window Islamic banks, window Islamic transactions. Actually, we just, as Turkey, we just give the allowance to the banks, full-fledged Islamic financial transactions. Yeah.
Thank you, Umar Bey. We have other hands raised, but in the interest of time, we'll push those questions to the panel discussion. And if you are around, maybe we can forward those questions to you as well if you're available, inshallah. So let me thank you very much for this very interesting presentation, inshallah. We look forward to the continued support that BRSA is extending to Aofe, as well as our support for the development of participation finance in Turkey and globally, inshallah. So we look forward to continuing our work, inshallah.
Inshallah.
Thank you, Marve. In the interest of time, we are slightly running behind time, and before any further ado, let me hand it over to the Secretary General of Aofe to share with us his perspective on the need and introduction of Aofe standards, how they have supported the development of Islamic finance in different markets, and what is in it for Turkey, and how it can further support its growth. So with that, Brother Umar, your presentation is right.
Bismillahirrahmanirrahim. Assalamu alaikum, everybody, again. And thanks for the great presentations about the participation banks, its centralized advisory board, as well as about the regulatory things. To be honest, one of my earliest experiences, just to share about it, one of my earliest experiences in learning of Islamic finance were from Turkey. While I used to work back in Anderson in Pakistan, and Al Baraka used to be our audit client. Al Baraka Turk, which was a special finance house at that time, and their working model was different. It was not like a normal deposit, it was more like a unit-linked product. And I remember learning that thing in a one-day workshop in which Al Baraka conducted for some selected people, and I was there. So learning through this regulatory thing, it reminded me of the earlier models, and I believe some of those models which were practiced in Turkey at that point of time were very good models. To be honest, they were more like a real Islamic finance thing. While the Islamic banking has grown a lot, but some of the earlier models which were exercised in different countries are still something that we need to learn from. So, but anyway, that's not a topic for today. It just reminded me for probably my own Islamic finance career starting from that time. And the first proper workshop or a seminar that I attended, it was a closed door and a small event, but it was one of the greatest learning experiences that I had. And I would like to thank those who actually contributed towards development of Islamic finance industry globally by bringing those models. With that, I would like to take you through the presentation. I need to touch upon what Aofe is. I need to touch upon a little bit about the need of global standards and how Aofe is trying to serve that need. So with that, without further time, I'll take you through some of the important points. First is the value proposition point, that some of the benefits and drawbacks of standardization, the pros and cons, a little bit about Aofe, a little bit about adoption and status of adoption of Aofe standards in Turkey, and key strategic and operational challenges. The topics that I have today are going to take too much time, so I have to be a bit brief. I know a lot of things will remain unaddressed in a manner that this should be, but I think there should be more sessions like this in which we can address those issues in more detail, particularly with regard to the standardization thing and aligning the Turkish practices with the global practices, making Turkey an even better investment opportunity for the global Islamic finance investors, and making things more streamlined with the global practices. For sure, a lot of things are done by the Turkish participation banks as well as the regulators, but there is a long way to go. We all are evolving. Islamic finance practices are evolving, and Turkish participation banking market is increasing, taking its share from the conventional. So it will be eventually needed to streamline things further. So I'll touch upon that as well. So let's first address a very important question. What is, there are a few realities that we need to understand, that what about the Islamic finance and participation finance? What is actually, what is the problem that we want to address here? So first thing is, there is a need to develop a financial system in line with Sharia, or in line with the ethical system, which is in line with the principles of Islamic Sharia, and which has on one hand a complete mechanism of addressing the prohibitions of Islam, but at the same time it is about fulfilling the maqasid as well, fulfilling the objectives as well, considering the real spirit of Islamic finance and Islamic economic system. The second reality is that the conventional finance has a lot of principles. Obviously, they have developed over centuries and they have a lot of good things to learn from, but at the same time, they have some fundamental issues which we believe are not acceptable from the perspective of Islamic finance. And not only this, I don't want to go into the philosophical debates and the economic theories, but in a nutshell, while conventional banking has its own benefits and we need to learn from them, but we need to understand that the conventional banking system is a part of the global market economy, and the capitalist system has its own evils, which has its own impacts. And we need to make sure that if Islamic finance is there, and it is different from the conventional finance in certain fundamental aspects. And for that purpose, everything that is developed for the conventional finance, the risk management systems, the standards, the accounting, the governance, the regulation, everything may not fit on Islamic finance as it is. And third reality is that Islamic finance is globally growing at a very fast pace, and it is taking its due share in the market, and it is actually establishing as a mainstream business rather than just a niche market in most of the new markets, not only in Muslim countries, even in the non-Muslim countries, it is actually showing growth, and it is actually becoming inevitable to have to have something to address it. Like even IMF has started considering the core principles of IFSB for the purpose of assessment of the financial stability of the countries having Islamic finance in a significant market presence. So considering these things, these things we need to address this problem, that how to have the solutions for these issues. And we at Aofe are trying to do our part on that. So for that purpose, the integrity, the resilience, the soundness of the system, having the strong foundations for the system, having the strong infrastructure for the system. We use the term integrity here, which includes soundness, resilience, strength of the infrastructure and everything. And for that purpose, what do you need? Number one, you need to make sure that the core, that is the principles of Sharia, are complied with. The second part is that the direction of the industry is towards towards achievement of the broader objectives for the benefit of the mankind, for the benefit of the society at large, for the benefit of our Muslim countries, and for the benefit of the society as well as the country economies. The third part is that it adopts the best practices. And as I mentioned briefly in the earlier slide, that best practices which are there for the conventional might not fit in all situations to Islamic finance. So some of the best practices might be suited because banking or finance have their own similarities, but at the same time, all best practices may not fit to Islamic finance. All regulations may not fit to Islamic finance because the real structure, the risk profile, the transaction characteristics, the core of the contract at times is different. So applying what has been developed for apples on oranges might not exactly be the best idea. The next part is that it's all about confidence. The banking, finance, these businesses are all about confidence. Any industry cannot be established unless it enjoys the maximum confidence of all the stakeholders. And this cannot happen without having a proper infrastructure in place. And the last point, the stability, the sustainability, and competitiveness, the commercial competitiveness, as well as the sustainability and stability of the system is needed. So for these purposes, for this problem statement, for ensuring the integrity, and when I say about integrity, it includes resilience, soundness, infrastructure strength, all these things. For that, what is the solution? And the solution, we believe, is a standardization and harmonization of the best practices in participation of Islamic finance. Aofe is trying to do its part on this, and we are working with other Islamic finance infrastructure bodies like IFSB, IFM, and others for working on developing the best set of standards and harmonized rules and practices to make sure that global Islamic finance and participation banking industry are on the right foundations. They are having the right infrastructure. They are having the right set of rules and principles in place to make sure that they remain sustainable, they remain resilient, they remain sound, they have the good infrastructure, and they are competitive to the market. They are no inferior, and from niche market converting to mainstream industry, they actually go on the sound foundations without the risk which are carried by this industry and unaddressed risks I'm talking about. Obviously, risks will always remain there, but addressing the risks in a proper mechanism and infrastructure is what is needed, and that's what we are trying to do. So this is a long topic, but I would like to very quickly touch upon some of the key arguments in favor of standardization as to how it helps developing the industry. The standardization and harmonization of best practices in Islamic finance leads to, number one, higher level of trust, because comparability. You have the comparability between different institutions. We have comparability between the industry in different countries. If you work in Bahrain, you work in Turkey, you work in Indonesia, you work in Pakistan, all the places you can compare the practices. Not only this, the comparability is also important for the financial reporting purposes. It's also important for the purpose of products and services. So standardization ensures higher level of trust because of, number one, comparability. Number two, transparency. From the transparent governance practices, from the transparent financial reporting practices, from the transparent Sharia principles and rules, and uniform Sharia principles and rules, you know that these structures and transactions become transparent, and it actually helps you establishing the better level of trust. The overall level of reliability is increased. The overall level of understandability is increased because every time reinventing the wheel, every time reinventing the products, every time reinventing the products and the services and the processes and the mechanisms and the documents, everything actually you can well understand that the level of trust significantly increase if you have these elements. Then I would like to touch upon two more aspects. One is accountability. That is very important because the level of accountability that you expect from a public interest industry like banking and finance and takaful and insurance and all that, what level of accountability you expect from them cannot be achieved unless you have a set of standards and set of good practices and regulations in place in a manner to ensure that accountability part. And we are talking about dealing with public money, and it's not only about dealing with public money, it's also about dealing with public money and faith and belief of people that their monies are invested in the best manner and in the manner in according to the principles that they want. So this is something that is very important from the accountability perspective. And one thing I would quickly touch upon is the timeliness. You want to introduce new products and services. If you have access to global standards, it saves your time, it saves access, and it eventually leads to the better level of higher level of trust. Again, each one of these topics has a lot of detail to be discussed, but I would like to touch upon certain additional aspects as to how these things are benefiting the investors, the economy, and the institutions themselves. From the economic perspective, I would like to touch upon, and particularly since the Participation Banking Association and the BRSA and KJK and other bodies are represented here, and very senior people are represented here, I would like to touch upon this very important aspect to the economy. The standardization ensures that you attract foreign investment. It ensures that the foreign investors are aware about the models and practices that you are following, and you can well understand that Turkey being at the forefront of the Muslim Ummah with regard to the infrastructure on the industry, on the services, even on the agriculture and other sectors. You can find that in Turkey particularly, it applies to every country, it applies to every market, but right now we are talking in the particular aspects of Turkey. So I would like to mention in particular that it attracts foreign investment. Turkey is already a very good opportunity for investments for a lot of Muslim investors and even non-Muslim investors, but the standardization is the key on which the relevant stakeholders need to think upon. And standardization in line with the global practices that we are talking about. Better resource allocation, you don't waste time on effort and resources. You have, again, increased wealth on the economy, improved international reputation. It attracts foreign talent. You can have foreign talent, and because the standardized practices ensure that you can have access to the foreign talent and the right talent, and attracts foreign technology. And these aspects that I'm talking about apply to a lot of industries. Generally, they can be applied to all industry which follow the international standardization practices. But here we are talking about in particular aspects of Islamic finance and the participation finance industry of the Republic of Turkey. For sure, it benefits the investors because they can forecast the things better, they can understand the things better, and obviously the better forecasting and better understanding result in better decision making for the investors. And eventually, we know that it eventually provides better returns to them as well. For the benefits of IFIs, they have the better governance, they have lower cost of capital, they have reduced cost. I would like to touch upon this topic, that it's very important to understand that the standardization saves cost. Standard documentation, standard practices, standard rules, standard processes for doing the financing transactions and providing the financial services. This all is ensured in a better manner, in a more effective manner, and cost-effective manner if you have this thing. At times, I share a joke with some of our colleagues. Let me share it on a lighter note, that a lot of countries who have adopted AAOIFI standards are war zones. You can see the list: Lebanon, Syria, Palestine, Afghanistan, Libya, Iraq. They adopt this AAOIFI standard. So on one hand, it can be a joke that, okay, AAOIFI is adopted only by war-torn countries. But on the other hand, you need to understand that it's a wise decision to adopt standards to save time, to save efforts that you are going to put on the infrastructure, either as an institution or as a regulator or as an infrastructure body. In all situations, you need to see that adopting the global standards actually ensures that you have better access to the markets and ensures that you do not reinvent the wheel. You do not waste time in reinventing the wheel. You do not, your efforts and time are used in the more effective manner, and obviously it reduces cost from multiple elements. From the legal the legal perspective, the cost is reduced. From the product development perspective, it is reduced. From the implementation perspective, it is reduced. Higher productivity is there, higher legal security is there, higher adaptability is there. Interoperability of the products is there. Your banks and your institutions can work with other institutions in different parts of the world, and without any wastage of time and effort and resources on aligning the products. Rather, you all both aligned to the same products already. A very important point is about better HR availability, because if the global standards are followed, you have access to the better HR from anywhere from around the globe, and people can move from country to country. You can have access to good resources from different countries. Aofe itself has its own very good human resource and capacity building programs. Our certified Islamic professional accountant program, our certified Sharia advisor and auditor program are proving to be one of the best means of providing trained and developed human resources around the globe. We have nearly 2,000 fellows of CIPA and CSA around the globe who are serving the Islamic finance industry in a very very effective manner. Obviously, it becomes like more feasible financially, and it becomes more feasible from the time and resource constraint perspective to use the better HR which is available across the globe. And now we are happy to have some of the candidates coming from Turkey for our capacity building programs, and we are willing to collaborate more with some of the universities and centers in Turkey to work on that part. With regard to uniformity of processes, I don't need to say anything. You can well understand that it saves time, effort, improves the efficiency and effectiveness, and the risk management part is improved. I just like to touch upon some of the arguments which some people feel are against the standardization, particularly global standardization. People feel that standardization destroys creativity and innovation and competitive edge. I would like to mention that Aofe, IFSB, they develop standards on a principle-based primarily. Some of the things are rule-based, but those are the rules which are coming from Sharia. Other than that, generally things are principle-based, which means that enough flexibility is available there. And in a nutshell, actually saying this thing is easy, but if the innovation means that you want to go out of the ambit of Sharia, then surely these standards do not allow it. But if you want to remain within the ambits of Sharia, I can assure you that there are a lot of untapped products, there are a lot of unutilized product in Islamic finance. There is a great opportunity of using, even within the Aofe framework and even within the Aofe Sharia standards, you have great opportunity to do that. One size fits all does not work at all the country and jurisdiction level as well as the AAOIFI level because of different stages of maturity and size. Our standards have been developed on an evolution basis, and they still consider the evolution of the Islamic finance industry in different parts of the world. We provide the proportionality, flexibility to different countries and different jurisdictions, as well as different sizes and types of institutions based on nature, time, and nature and size of operations of different institutions. So we take into consideration that part. There is one aspect that we have heard, that standardization results in loss of national sovereignty, and particularly some regulators are very much sensitive about it. But we believe that adoption of global standards actually does not mean that you are losing your power or your authority. Rather, the implementation is the real thing that needs to be done by the regulators and the country level bodies. And there is actually still a great room Because if you want to develop, everyone country wants to develop separate accounting standards, separate governance standards, separate Sharia standards for them. That might be a good argument for them that, oh, yes, we want to maintain our own school of thought, or if we want to maintain our national sovereignty. But at the same time, we need to understand that we are not thinking the same way on the conventional front. When we talk about Basel Accord, when you talk about IFRS, nobody comes with this argument. I don't know why somehow people bring this argument only for Islamic finance. We need to understand that the global standardization has more merits as compared to demerits, and that is the reason that IFRS are adopted partially or fully in maybe in 180 countries. So and Basel Accord, either like, you know, even if there's some of the countries have not moved to the 3, but it's still the and the Solvency II and all these, if you see, global standards are being followed because the world is actually turning into a global village. And I don't know why actually some people feel that only on the Islamic front, on the participation banking or Islamic banking front, we are going to lose this national sovereignty, while we don't lose it in case of IFRS, or we don't lose it in case of Basel or other international standard setting bodies. So to be honest, I do not believe that we are applying the same analogy on all the fronts here. Islamic finance is a nascent industry in its earlier stages of development. It needs special exemption to grow, otherwise will fail. So if we are talking about estimated $3 trillion market, having 2,000 plus market players with presence in 70 plus countries, and we say, oh, it's infant. I'm sorry. Yes, it might be infant in some of the countries, but even for those countries, it's not possible that they can live without access to other countries. I can give you an example, one very good example of Oman, which started on day one with very strong governance framework, which started on day one with adoption of UFI standards. And in a nutshell, if I would say that Oman is probably one of the largest growing markets. They have reached nearly 15% in the fastest time, and actually they are going much faster than most of the already established markets that are there for like 40 years. Their growth rate for Islamic finance is much faster. So to be honest, I would say that having access to the global standards for an infant is more important rather than, sorry to say, other way around, that infants need no standards, sorry to say. Then we talk about the accounting governance. A lot of people feel that, okay, yes, we need Sharia standards, but accounting governance, etc., are value neutral in content. This I will like to answer when I answer about AOFE. I quickly brief about AOFE. So how AOFE is trying to serve this purpose? AOFE was established in 1991 by key industry stakeholders. We have 146 active members. We are talking about active members only. AOFE has multiple boards. We have Sharia board, accounting board, and governance and ethics board, which develop standards in 5 areas. We develop standards in Sharia, accounting, auditing, governance, and ethics. And this whole function is supervised by our board of trustees, which are accountable and answerable to our General Assembly, which comprises of 146 active members, as I said. We develop standards, we try to implement them, we do the activities relevant to awareness and advocacy, we develop human capacity for the purpose, we have our own capacity building programs, as I mentioned, we do additional capacity building initiatives, like right now we are going through a series of annual refresher courses and refresher programs on AOFE's standards, and we have started working on the additional workings on the research side, started publishing some of the books on the research side, as well as on the we've started our own journal about Islamic finance accountancy, and shortly we are going to start a journal on the Sharia side as well. Our standards are available in multiple languages. Our Sharia standards are available in Arabic, English, French, Russian, Urdu, and thanks to our brothers in TKBB and BBRSA in Turkish language as well. AOFI's primary objectives are development and advocacy and promulgation of accounting, auditing, governance, ethics, and Sharia standards for Islamic finance and Islamic finance transactions, structures, including Waqf and other ancillary institutions in line with Sharia principles and rules. And our ancillary objectives include the awareness part, which includes conferences, training programs, seminars, developing human resources, and providing some certification, advisory, and assurance services on a global scale to support the Islamic finance industry. This is a very important slide, and this is answer to the last argument that I mentioned. I'm going to touch upon that. At AOFI, we believe that the 5 sets of standards that we develop actually are complementing each other. Sharia is the basis and the foundation and the center point. So we develop Sharia standards which apply on Islamic finance products globally. But with regard to as to how these Sharia rules and principles are implemented and these are reported, we need to have a set of standards, which is a comprehensive set of standards. So, for example, if you can have the best rules available in the market, you can develop the best rules. But if you don't have a good mechanism of implementing those rules on the ground, you will always fail because those rules will not be implemented. So the governance standards of AOFI actually provide a mechanism and control mechanism and governance mechanism as to how those Sharia principles and rules should be implemented in the institutional framework. Then secondly, when you talk about the financial services industry, it's always about as to how these transactions are executed, recorded, reported, presented in a transparent manner. So for that purpose, you cannot achieve those objectives unless you have a good mechanism of financial reporting where you can implement those rules on the ground in a manner that every transaction is recorded, reported, presented in the manner as it is intended to be a Sharia compliant and a ethical transaction. For that purpose, accounting standards serve that purpose. And not only this, additionally, accounting standards make sure that in line with those transaction structure, the right amount of revenues are recognized, which are legitimate as per Sharia. The right amounts of profits and losses are distributed and allocated to different stakeholders in line with Sharia. So this is actually complementing that part. Then we have the spirit of the transactions, which is the Sharia, which is the ethics. And we believe that the ethics actually are the spirit of Sharia. You cannot have it implemented unless you have the spirit. And I would touch upon that all these things need to be tried and tested, and there has to be an accountability mechanism, and that cannot happen unless you have a good audit and I would say audit and Sharia audit mechanism. With that, I believe I'm running a bit late. So, and we are already a bit late when I started my presentation. So I would like to skip a few slides. The mechanism and the process that we follow for the standard development, it will be available in my presentation. With regard to the adoption status of AOFI, I would just like to touch upon this one. Our brothers have provided a link to AOFI footprint report in the chat window. You can have access to that. This is the summary that there are nearly 35. I would just like to touch upon that the maximum number of countries, that nearly 36, 37 countries, where at least 43, nearly 45 regulators have adopted AOFI accounting governance Sharia standards, either in full or in part or as guidance, etc. So this is the more details are available in our footprint report. In Turkey, our standards have been translated, Sharia standards have been translated, accounting standards are being translated, some are translated and some are being translated. New conceptual framework is being translated. The standards are translated into Turkish and placed into Turkish legislation, but as guidelines. They are not mandatory as of now. They are on a voluntary adoption, and they are as a guideline basis, and we hope that eventually they will become they will become applicable on a mandatory basis like so many other countries. On the Sharia side, as I mentioned, standards are done. On the accounting side, this is the list of the standards which are already translated. On the auditing side, these are standards. Almost all auditing standards are translated. The Code of Ethics has been translated. These can be accessed on the KJK website. I would like to skip this part of strategic and operational challenges and adoption because of the limitation of time, and I would expect that some of these challenges will be discussed during the panel discussion, for which I would also love to hear from very learned participants from Turkey and from outside Turkey. And with that, I would like to thank you all for patient listening, and my apologies because we are running a bit late. So for my apologies for that. Thank you very much. Assalamu alaikum warahmatullahi wabarakatuh.
Thank you, Brother Umar, for introducing Aofe as well as the benefits of adopting standards from a global institution. I think there's no doubt that the benefits are immense, and I think that has been evidenced from some of the markets that have adopted the standards in general. So I'm mindful of the time, but there is one question if you would like to address, and maybe we can do it after the discussion, after the presentation from Ms. Sabine. So in the interest of time, I'll move over to Ms. Sabine Salim, the CEO of Islamic International Rating Agency, who will deliver a presentation on the need for enhanced ratings for Islamic finance in general. Islamic International Rating Agency is a very important infrastructure institution that has been set up. It's an independent institution set up to provide independent assessments to issuers and the issues that conform to the principles of Islamic finance, with a special focus on capital markets, primarily in the OIC region, and to provide its rating on Islamic finance or ethical finance across the globe. They are doing very instrumental work. We at Aofe have collaborated with ERA, signed an MOU and collaborated on developing a very important governance-related standard on the rating side. So without any further ado, let me hand it over to Ms. Sabine for her presentation. Ms. Sabine, I can see your presentation, but I can't hear you.
Assalamu alaikum. Thank you very much, Dr. Rizwan, for this introduction. And I would like to thank Aofe in general and TKBB for this opportunity to present to such an audience. I see from the participants a number of our friends from Turkey. IRA has actually been engaged in working with some select financial institutions, exclusively, of course, in the Islamic financial space for a number of years now. And it is a key market, as you had said earlier on in this session also, which we are really looking forward to in terms of the growth of Islamic finance as a large economy and with considerable potential, and also focus on developing Islamic finance within the country. So I think the key takeaways in this particular presentation from IRA would be why do we need specific Sharia compliance and fiduciary ratings? I think in the earlier section, firstly, I would like to also express my thanks to the earlier presentations that were made. And in the previous presentation, of course, we talked about standardization and its benefits and how it promotes the growth of the industry, given that it really has more benefits than costs. And this argument of why we need Sharia compliance and fiduciary rating actually takes that discussion forward. It takes it further from that point onwards. So let me first focus on key points, introducing IRA a little bit, where it comes from as an agency, as an institute, what has been our role in trying to develop an approach towards Sharia compliance and fiduciary ratings. And also, I think I would extend earlier presented arguments a little further by giving another analogy. I mean, one analogy that was rightfully presented and talked about was the standardization that came globally from Basel frameworks and from international financial reporting standards. I would also like to give some further analogies, which I think will further make the case of why we not only need to standardize certain standards and why we need to standardize the practices in Islamic finance, but also why a third-party opinion is necessary, because it gives confidence to the investors that they are indeed getting what has been held out to them. So this is going to be the gist of this presentation. Firstly, I think it is important to understand that IRA has a very specific mandate. It is a twofold mandate. Not only is IRA poised to provide opinions to investors with regards to investment opinions, just like other rating agencies, global rating agencies do, and of course to develop the international access of the countries within the OIC, but also develop domestic capital markets. But another part of its mandate is to provide investors with assurance as regards compliance of participative finance investments with accepted principles of Sharia compliant finance. I think this is very important in the sense that IRA is perhaps the only rating agency which is charged, has the mandate of providing a special type of assurance to investors, in addition to providing assurance from an investment perspective, from an investability or a creditworthiness objective, which is how we see rating agencies across the world. So we are also charged with the responsibility of providing investors with assurance as regards compliance of participative financial investments. And here perhaps it's pertinent to mention that IRA is part of the entire infrastructure which was founded for the development of participative finance globally. So it is Islamic Development Bank is a founder shareholder, in addition to a number of other Islamic financial institutions in multiple jurisdictions. So which means that it gives IRA a certain kind of neutrality and a certain kind of independence in its approach, regardless of the fact that it still pursues standardization as an objective. And IRA is also accepted. It is licensed by a number of regulatory authorities, both in terms of the capital markets associations and boards, as well as central banks in a number of jurisdictions, notable amongst which I have mentioned in my presentation, and they are before you on the screen. These are the Central Bank of Bahrain, and also Banking Regulation and Supervision Agency, Turkey, as well as the Central Bank of Jordan, which classify IRA as an ECI, international ECI, in addition to the recognition by the Central Bank of Iraq, which came very recently. We're also licensed by the Capital Markets Board of Oman and recognized as an international rating agency by the Securities and Exchange Commission of Pakistan, Astana International Financial Center. And IRA has a subsidiary in Turkey, which is also licensed by the Capital Markets Board of Turkey. So with just a little bit of introduction of what IRA has set out to do, and I would just like to proceed forward with the main topic of this presentation, which is why do we need these ratings, which are specifically focused on the Islamic finance, on the compliance of practices and products and structures with the principles of Islamic finance. So firstly, in 2012, IRA had introduced its fiduciary ratings, and I have given on this page a snapshot of IRA's fiduciary ratings, which basically, as I had said in my earlier slide, it focuses on both the aspects, the investability, the credit rating, as well as a fiduciary score. So right from the beginning, IRA had this in mind, that investors need to know a little bit about the corporate governance practices. They need to know a little bit about the Sharia governance practices in an institution, for the simple reason that when an investor invests in an Islamic financial institution, his objectives are twofold. He's not just investing because he wants protection as a depositor, which he expects in the normal course of business, but also because he wants to know he wants to have the assurance that indeed he is investing in a manner which is compliant with Sharia. So he's trying to do his best in trying to achieve both objectives. So this is something that had been introduced in 2012, and this was our fiduciary ratings. We have assigned these ratings to more than 35 institutions, obviously only Islamic financial institutions across 16 jurisdictions within the OIC, including Turkey, including of course Bahrain, and very recently Iraq. In 2020, along with the GS-IFI 10, which is the governance standard for Islamic financial institutions, which was developed by Aofe in collaboration with a number of noted, I would say, experts in the field, and also IRA. This was an effort by IRA as well, to introduce the Sharia compliance and fiduciary rating standard, the GS-IFI 10, under which IRA then proceeded to develop its own methodology, which was introduced in 2020. So this is a more recent development. And what it does and the way it differs from our initial fiduciary rating approach is that it, in a very focused and comprehensive manner, gives the investors an idea about each of the products, each of the practices. It is perhaps, in terms of its comprehensiveness, perhaps a groundbreaking product, if I may say, that it basically focuses on a range of practices and a range of products within Islamic financial institutions in terms of their compliance with Sharia. This is also something which is not completely uninitiated in the market. The methodology was introduced in 2020, and since then, IRA has proceeded with assigning these ratings to a commercial bank in Pakistan, and also another rating is in progress in the Takaful sector. So this particular rating approach is targeted at Islamic financial institution at issuer level. And the idea basically is to give its investors confidence in the quality of the principles which are being utilized to deliver banking services or the Takaful services. I think it is perhaps pertinent to mention at this point that Islamic finance is not just being rated by IRA. Islamic financial institutions as entities are also being rated by other global credit rating agencies. But these rating agencies have chosen to be silent on Sharia misgovernance as a source of risk. And this is an explicit assessment, an explicit declaration that as far as the aspect of Sharia misgovernance is concerned, leading to specific types of risks within institutions, global rating agencies have generally chosen to stay silent on the issue. But the difference between the work that is being done by IRA, both through its fiduciary ratings, as well as through its SCFR ratings, the Sharia compliance and fiduciary ratings, specifically focuses and caters to the Sharia misgovernance as a source of risk in these entities. And here I want to touch base, as I had said earlier, that in our previous presentation by Brother Omar Ansari, we had talked about the analogy that how Basel standards have paved the way for international transactions, cross-border investments, and it has provided confidence to international markets in the safety of the banking systems across the world. In a very similar way, we have seen that in more recent years, we have seen the emergence of green bonds on the international, I would say, international scene. So these green bonds there have been a set of standards which have been issued of what constitutes a green bond, what does not constitute a green bond. And this greenness is also being commented upon both by mainstream rating agencies as well as specialized rating agencies in terms of being able to give assurance to the investor that what is being sold as a green bond is indeed a green bond. So the question that comes to mind, that why have we not really initiated something very similar for Sharia compliance? An investor who invests in a Sharia compliant instrument or in a Sharia compliant entity wants the assessment. He seeks the assurance that what he's investing in is Sharia compliant in terms of a set of standards. So this is the basic reason of why Sharia compliance and fiduciary ratings are needed. It is basically to give investors the assurance that in terms of the practices and the products that are being implemented, the standards that Aofe has issued or IFSB has issued or other international standard setting bodies have introduced, this also takes into account certain regulatory directives within OIC jurisdictions, which have done a lot of work in terms of how Sharia aspects are going to be managed within Islamic financial institutions and instruments. To that extent, we look at the rated entities' compliance with these standards, and we come up with an opinion that can easily be understood by the common investor out there. So the idea basically is that despite so many years, we have seen that there is a gap in the market, which says that the level of confidence that the investors have in something being Sharia compliant or not is still an area which needs to be worked on. And perhaps this has been one of the biggest hurdles to the growth. As much as Islamic finance has been growing over the past few years, we think that standardization and independent opinions on the Sharia compliance aspect have a great role to play in overcoming the level of any hurdle to growth in terms of the lack of confidence in the general public or investor communities. So for this, it was important that IRA had to develop its own independent methodology, which follows a consistent, methodical, and rigorous analytical process, and subscribes to a specific code of conduct and ethics, which is consistent with the IOSCO code, which is the International Securities Commission's organization's code of conduct for rating agencies. And of course, we are utilizing and banking on the services of IRA's experts in the fields of investment ratings and credit ratings, in addition to Sharia experts who guide us in the process of assigning such ratings. I think the key takeaway from this slide really is the fact that in terms of the rating process that we follow, which is also, by the way, in line with the compliance, the Sharia compliance and fiduciary rating standard of the Aofe, the key takeaway is that the process aims to be highly interactive, highly understanding, and appreciative of the work that is put in by Sharia scholars on the boards of so many Islamic financial institutions, those who have been appointed to study and evaluate the quality of the structures of instruments and sukuk which are being issued in the market. So the process is aimed to be thorough, interactive, understanding of local regulations and international standards. So the key objective of our approach to the SCFR ratings is to identify the commitment of an Islamic financial institution or the commitment or the quality of the structure of a sukuk in terms of Sharia compliance and fiduciary performance. To measure an IFI's operation or sukuk structure in line with international standards, as I've said before, local regulatory guidelines also, and internal Sharia provisions, Sharia board provisions within entities or those which have been appointed and put in charge of sukuk instruments. I think, again, the key points that I want to be the takeaway from this slide are that IRA's approach is very flexible. We are looking at the international standards that should be that are expected to be followed by entities, by institutions, and also we are mindful of the local regulations which are expected to be followed. So if there is any law or constraint which does not allow an institution or a sukuk to follow internationally accepted practices, then the rating approach has been tailored as in a manner that it does not penalize the rating. So what it aims to do is to provide investors on a local level with an idea of how an institution or an instrument fares against other local institutions and other local instruments, and how the institution or a local or an instrument fares against international instruments and international institutions. So the idea is to provide investors with a very comprehensive understanding of what they are investing in stands in terms of local and international accepted standards of Sharia compliance. Just over the next 2 slides, I would want to give the team an idea, because this is a question which is often asked from IRA, that this approach that Aofe has developed to rate institutions and institutions, it's not just confined to institutions. It also extends itself to instruments. So on this, in this presentation, I'm trying to show the participants the key areas which make this rating approach unique, and the way it applies to institutions, and also the way it applies to instruments on the next slide. So in terms of institutions, I have given on this slide the weights that we have assigned to each and every component of the SCFR rating, with obviously the most significant weight assigned to compliance with Sharia. This is in terms of the structure of products that are being offered by an institution. Then, of course, a very key area that has to be looked at is the Sharia governance framework that is being followed by any institution, be it a bank or a takaful or a fund. The Sharia governance infrastructure means all of the organs of Sharia controls that serve to institute Sharia-related controls in an institution are evaluated against a certain set of standards issued by Aofe, IFSB, any standard setting body, including local and foreign regulators. Then corporate governance standards in terms of the way an organization's corporate governance framework enables the institution of Sharia controls within an entity. And the level of transparency and representation provided to stakeholders other than shareholders. We have looked at corporate governance as being a major way in addressing the information requirements or representation requirements of minority shareholders. But Islamic financial institutions, which are participative in nature, there is also a need to provide representation, information, involvement of investment account holders. So the purpose of this approach is also to provide investors an idea of how much of an involvement will be enabled of the investment account holders into the workings of a particular institution. And of course, one very key point at the end of the day is the performance of an entity to be able to fairly distribute what is due to them in terms of the earnings and returns which are being generated by an entity. So at the end of the day, the approach culminates into how does an Islamic institution differentiate itself from conventional institutions in terms of the quality or the level of participation that an investor actually enjoys in returns, in the benefits that come from an investment. So this was just a brief snapshot of the way the Sharia compliance and fiduciary rating approach is being looked at by IRA under the GSIFI 10, which is a standard also issued by Aofe. And I just want to also extend the point that there is another standard which is coming under the auspices of Aofe again, which looks at Sharia compliance and fiduciary standards of Sukuk specifically. And the attempt is basically to provide a very similar guidance to investors. We have seen, particularly in the case of corporate Sukuk issuances globally, that while in case of Islamic financial institutions, the regulators are generally very well entrenched in providing comfort and protection to investors. But in terms of corporate Sukuk, there is a gap in the market in terms of investors in these Sukuk to be able to get assurance, independent assurance of the quality of a particular instrument. And in recent instances, this has emerged as a key factor which has constrained the growth of corporate level sukuk. What we see out there in the market is really a lot of sovereign sukuk followed by IFI issuances. And we have seen some constraints to private sector corporate sukuk issuances. And we feel that compliance with a specific set of standards, which is agreed upon by a host of a range of market participants, can play a very important role in the growth of this segment of capital markets, Islamic capital markets. So on a very similar note to the way we have addressed Sharia compliance issues and fiduciary aspects in institutions, with a very similar approach, we have used to be issued, of course, but for sukuk instruments as well. And we hope that that will serve the purpose in terms of allowing and enabling broad-based growth within Islamic capital markets, both within Turkey as well as internationally. So this is basically the gist of my presentation. I thank you for your patient audience, and any questions are welcome.
Thank you very much, Ms. Sabine, for a very comprehensive presentation on the need for enhanced ratings within the Islamic finance industry, and ratings based on not just only on the credit side, but also taking into account the Sharia compliance and governance principles. I think going forward, this will be very interesting and a positive contribution to the Islamic capital markets, further enhancing its value proposition within the industry for the benefit of the stakeholders. So I thank you so very much. I don't see any questions per se for now, maybe there will be some questions that may be addressed through the chat window, if your time permits to stay with us for the panel discussion.
Sure.
I am mindful of the time, and really I would like to move on. There are I have some questions in general from Aofe's perspective and also from the rating side, but I'm also mindful of the time. We are about half an hour behind. We are running half an hour behind our time. So I would like to move very quickly to the panel discussion, and I would also first of all like to apologize for running for the late running the late show to the chairperson or the moderator, Professor Najda Sensoy, and also the very able and experienced panelists who have joined us from different parts of the world, from Turkey as well as from other parts of the world. So first of all, my apologies for the delay, but I hope and pray that you enjoyed the discussion and presentation so far, and so did our audience, and hopefully there will be some more interactive discussion during the panel discussion. So with that, let me hand it over to Professor Najda Sensoy, a very experienced regulator, academician, professional, who's also the member of Aofe Board of Trustees, to moderate the panel discussion. He will be joined by the panelists, very experienced panelists, including Dr. Abdurrahman Chetin, who's a Senior Chief Banking Specialist at BRSA, or better known as BDDK. He will also be joined from the private sector. He will be joined by Dr. Ahmed Al-Birag, Deputy CEO of Kuwait Turk Participation Bank. We will also have, sorry, I hear some noise. If you can all mute yourselves, please. We will also be joined by the chairman of Aofe Governance and Ethics Board, Mr. Farooq Raza, also CEO of a very important advisory organization based out of the UK. We'll also be joined by Mr. Fahim Ahmed, President of Islamic International Rating Agency. Thanks to him joining us, and we pray for his good health, inshallah. And last but not least, we will also be joined by the accounting regulator and also a member of Aofe Accounting Board, Mr. Samit Arsalan, who is an expert and coordinator for international affairs at KGK. So if you can request Professor Najd to take over, inshallah, for the interesting discussion on the forthcoming regulatory framework and presenting different perspectives from the participation from the private sector as well as from the regulatory front, and what we have in our plate going forward, inshallah.
Bismillahirrahmanirrahim. Assalamu alaikum, dear participants, distinguished audience. Now, today we are making another event in Turkey with contribution of TKBB, Turkish Association of Participation Banks, Aofe, and Islamic International Rating Agency. I congratulate these three institutions to make happen this event. The frequency of events are increasing in Turkey with Aofe. It is good progress. Today, we are covering participation finance regulatory framework, and we listen to experienced speakers representing the authorities in Turkey. Aofe, as an institution, started in 1991. For 30 years, it produced a rich set of standards, which is a good reference for Islamic finance all around the world. When we talk about regulation, it is very significant for conventional and Islamic finance. Even it is more significant for Islamic finance because in Islamic finance, especially in Islamic banking, the relationship between the depositors, let's say, or the fund owners, investment account holders, and the bank is a fiduciary relationship. Therefore, it needs more regulation. There are 5-6 different areas which Aofe makes standards as law, Sharia, accounting, auditing, governance, and ethics. And in Turkey, therefore, there are different authorities relevant to Aofe standards. Two of them are BRSA, Banking Regulation and Supervision Authority, and the KGK, the Public Oversight and Accounting Standards Authority. Both of them have good relationship with Aofe, and they are in contact with Aofe. Today, in this panel, we will start with representative of BDDK, which is BRS, Banking Regulation and Supervision Authority in Turkey, which is independent from central bank. Our model is banking supervision is independent from central bank. In some countries, central bank makes this supervision. However, in Turkish Central Bank, now there is a section established to deal with participation finance. Before giving the word to Abdurrahman Çetin, Dr. Abdurrahman Çetin, which represents BRSA, BDDK, let me introduce him. He has got his PhD from Marmara University and master's degree from University of Illinois in USA. He is also active in Aofe, being member of Public Interest Monitoring Consultative Committee. I wish Dr. Abdurrahman Çetin to touch upon some points like the Islamic finance ecosystem in Turkey, how BDDK or BRSH oversights the sector. Also in the speakers, while speakers talk, we listened that there is a central advisory board attached to Association of Participation Banks, but it is established depending on a resolution of BDDK. Therefore, it is relevant to BDDK or BRSA. I wish to get Dr. Abdurrahman Çetin's opinion on the works of Central Advisory Board, especially the standards the Central Advisory Board makes. For example, recently they promulgated a standard on murabaha. I don't know, did Dr. Abdurrahman find an opportunity to read it and compare it with the Aofe murabaha standard? If so, please make a brief comparison in between Turkish Central Advisory Board murabaha standard and Aofe standards in Sharia and in especially in Sharia side. We have 1 hour, as Brother Rizwan mentioned. We are lagging behind the program. Therefore, please make your talk in 10 minutes. Dr. Çetin, floor is yours.
Do you hear me?
Yes, we are hearing you.
Bismillahirrahmanirrahim. Thank you, Professor. I am very happy to be one of the panelists in the webinar of Aofe, TKBB, and IRA. First of all, I want to thank dear Secretary General of Aofe, Mr. Omar, Secretary General of TKBB, Mr. Othman, and President Islamic Rating Agency, Brother Fahim Ahmed, and Professor, the moderator of the webinar, Professor Najdat, and the other valuable participants. Ladies and gentlemen, Assalamu alaikum wa rahmatullah, and best wishes from Istanbul. I hope this meeting will be beneficial for all stakeholders, inshallah. As the chairman and the speaker, some speaker mentioned, to be established ecosystem, it is very important for the Islamic finance, for the successful of the Islamic finance. In Turkey, in the beginning, Mr. Omar Çetin from the TKBB, he mentioned about the participation banks methodology, historical. I want to not because of the time limitation, I want to only mention about some essential indicator. In July 2021, the total size of the Turkish bank sector is 6.7 trillion Turkish liras. And the asset size of participation it surpassed 500 billion TL. And the share banking sector around approximately around 7.5% now. In Turkish banking sector, totally there are 55 banks, and 32 of them are deposit banks, 6 of them are participation banks, 15 are development and investment banks, and only 2 are under saving deposit insurance fund. Turkish finance sector is dominated by the banking sector, as you know. More than 86% is coming from the financial sector is by banking, and only approximately 7% is coming from the market capital institutions, and 4.3% is coming from the insurance, and the others is remaining from the factoring, financial leasing, and asset management companies. As the speaker mentioned, we established Islamic Finance Department in BRSA in 2016. And in 2018, the Central Advisory Board was established in TKBB. And the Participation Finance Department establishment the Presidency Finance Office in 2021. In the same year, Participation Banking Department established in the Central Bank of the Turkey. As the professor mentioned, Professor Hassan, I want to congratulate presentation, and he mentioned about the Central Advisory Board and duties, and advisory committee should be established for every participation banks. This is very important steps, as I know. Turkey, after we initiated membership of the Aofe, the Capital Market, Central Bank, and KGK, and Treasury Under Secretary of Turkey, they initiated Aofe membership, and it is very important for the collaboration with the international standards. So, as we know, among the supervisory authorities and some participation banks, they have started to play a more active role in many organizations such as Aofe and IFSB and other international institutions. For promoting Islamic finance, there are some requirements. First of all, we should be separate the independent Islamic finance law, and Mr. Omar mentioned about it, and we should be establish a central advisory board, and Mr. Hassan mentioned about it, and we should be increase the productivity of the variety and establish the standards, international standards, as the moderator asked me about the standard Murabaha standard, and we'll be, inshallah, talk about more detail later. And we should be increase the number of the Islamic institutions and raise the qualified human resources. In the beginning, as the Dr. Omar, Dr. General Secretary Aofe, Dr. Omar has mentioned very, very important things, the increase the human resource and create a good condition for the ecosystem. The participation finance sector ecosystem will be created by the government, participation banks, and maybe other window investment banks, and Tekaful, Islamic capital markets, and others. For all the stakeholders should be make contribution. With the arrangement, an important contribution will be made in Istanbul Finance Center to become a global participation. It is very important to develop participation finance sector in government medium-term plan covering the period of 2022-2024. In this context, an independent participation finance law should be prepared and released. The second important thing, the government's medium-term plan program is planned to establish a participation finance rating system for the Islamic Financial International Agency, and the sister, he mentioned about this is very important step. Maybe I think the brother Ahmed from the era, he speak and share with us.
Brother Abdurrahman, you have 4 minutes.
Yeah, okay. I will be more fast, inshallah. In Turkey, establishment some saving finance company. This is the new sector, and we will be permitted make a regulation, and the board of the directors, at least five members should be give permission, and these companies, they should be joint stock company, and the saving finance company should be bring more than 100 million Turkish liras for establishment. For the banking sector, including participation banks, should be preparing their reports to comply with International Financial Standard, IFRS. So independent audit companies, when they prepare their auditing reporting, they think only consider the IFRS principles. On the other hand, some adjustments maybe were made by the BRSA and mentioned, Dr. Omar Chekin, he mentioned about it. International management, I think the Murabaha, it was in Turkey, the finance system, of course, Murabaha is approximately 90% in Turkey, and financial leasing Murabaha and Mudaraba are a small percentage. The participation banks should be focused on issue, maybe more Ijara, Murabaha, Mudaraba, and more Sukuk. It is very important, and to make a differentiation. To increase Islamic human resource is very important, and many, especially in the Turkey, in the last few years, many universities established Islamic research and economic centers, such as, for example, Sabahattin Zaim University, Istanbul University, Sakarya University, Konya Karata University, and other universities established Islamic curriculum.
You can pass to the Central Advisory Board your comments on it, because you have 2 minutes.
Yes, okay. I will mention about the consulting board make its own standards and or accept AAOIFI standards. In my personal opinion, regardless of my organization, we don't discover the United States America again. AAOIFI has made a sound regulation on accounting, auditing, ethical principle, and Sharia standards with its long years experience. The fact that there is some secularism in the constitution of Turkey, so that make it difficult to implement AAOIFI's Sharia standard in Turkey. But on the other hand, it is possible to, for accounting, auditing, ethical standards are possible to implement it for Islamic financial institution in Turkey. I think some of the speakers mentioned about the TKBB, Dr. Hassan mentioned about, Professor Hassan mentioned about it, and Murabaha standard, Professor Nejdet asked me, but when we prepare some, I think the professor is more detailed, more information about this issue, because he was a part of the preparation, the standard. I read it, but there are some features that are comply with each other, especially when we prepare international, when we prepare TKBB standard, they look the international standard, they took consideration of the AAOIFI standard, and take consideration of some maybe IFSB standard, ethics rules, Sharia rules. So there are some similarities between each other. I couldn't find a big differentiation between both of them. Thank you very much.
Thank you, brother Dr. Abdurrahman Çetin. You saved your time, very good, manage your time. And now the floor will be a practitioner, a representative from practice, from Kuwait Türk Participation Bank, Dr. Ruşen Ahmet Albayrak. He got his PhD, therefore he is also academician and Deputy CEO of Kuwait Türk. I will give the floor to Dr. Albayrak, and I wish him to touch upon participation banking in Turkey with reference to your bank and other banks in Turkey, especially distribution network of the participation banks, government policies and regulatory support for participation banking in Turkey, and if possible, your comments on Aofe standards as a practitioner. Do they help industry for building capacity for future? The floor is yours, Dr. Ahmet Albayrak, please. You have 10 minutes.
Thank you, Professor Şensoy. Brothers and sisters, Selamun Aleyküm ve Rahmetullah Berekatuhu. I would like to brief as much as possible. Actually, participation banking industry, as panelist mentions, started in 1983 as special finance houses. From there, I mean, we have a long story, let's say, approximately 38 years now, and right now, participation banks has a 7.5% asset share in total banking industry. But I mean, in fund utilization or credit side, let's say 6.4%, and the deposit side 9.6%. If we can also consider their physical network throughout Turkey, which is they have approximately 1,300 branches all over Turkey, and it's approximately 11.5% of the total banking branch networks ratio. So as you see, I mean, in comparison to assets, I mean, deposits and credit, in comparison to the physical network, there's a still big capacity to grow more. And also we can assess that when we look at the participation banks and conventional banks through the last 7 years, we can see that at least 10%, I mean, 10% bigger growth rates for participation banks. Thanks to government own participation banks, they came recently during 5 to 6 years now, and they are just really pushing the industry up and enabling the industry grow more. Actually, right now, as Professor mentioned, we have HR capacity, technology capacity, and we have all the capacities that, I mean, we could really push the growth, up and running. And right now, approximately, again, 90% of our total transactions, I mean, we do it in our alternative delivery channels, which gives us more room to reach upon the more and more customers over the years, and there's a really growth potential, not just 15%, but even more. But definitely, for the generations 10 or 20 years from now, they really would like to see Islamic banking really conducted in a real Islamic terms and a part of international Islamic network, because in a global world right now, everybody really affects each other. Every country's implementations affects each other, and Aofe really would like to bring more and more experience and the power and strengthen Turkish participation industry in a very transparent way. Let's say this is very transparent. And actually, if we look at the speakers' information, we could see that in approximately 40 years of lifetime of participation banks, just last 20 years more efficient, and it start with the 2005 legislation for letting special finance houses to participation banks, and from there we see that more effective and more focused legislation and regulative framework for participation bank. But unfortunately, in 2012, at the end of 2012, we have, Turkish government, Turkish Treasury just issued the first sukuk in Turkey. It was, of course, very, very important for our managing our liquidity. And also we could see that, I mean, central governance, central Sharia governance board just established 3 years ago, and I mean, special department in BRSA established 5 years ago. So we are really lagging behind the international Islamic finance experience. So in order for that, I believe that we have to converge, maybe not immediately adopt, but we have to converge with the AOFI standards and implementations if really we would like to become more internationally accepted, if we would like to become more, really in terms of, Islamic, without questioning whether we are look like a conventional or not, but we are a really, Islamic banks, not Islamically compliant, but Islamic-based financial institutions. I believe that. I just, before come to the panel, I talked with our Kuwait Turk head of internal Sharia controller. He said, I asked him that, I mean, how much we are using AOFI's Sharia standards in our Sharia guidelines in Kuwait Turk. He said approximately a minimum, and 80% of our Sharia guidelines, I mean, we are comply with the AOFI standards. Actually, if we are, 80% even more compliant with the AOFI Sharia governance guidelines, I don't think there will be a problem while we are reporting it in AOFI's, accounting standards. Because if there is no problem at the infrastructure, as Brother Ömer Ansari explained, we can establish the superstructure on it, easily, and actually we can implement the accounting standards, ethics standards, and governance standards very, very easily. So we are very in line with the AOFI, Sharia, guidelines. As I mean, Sister, CEO explained, we are very in line with the Sharia supervisory governance structure also. So we are, I mean, very well.
Dr. Albayrak, you have 2 minutes.
We are very close to the AOFI standard. Actually, I would like to conclude with saying that if BRSA, support, if the government gives more support, I believe that participation banks of Turkey is ready for more AOFI oriented, guidelines. And even our central Sharia, would like, of course, also they are also taking the AOFI standards as their guidelines. They are first looking at it, and then they are just, publishing and publishing their standards. Actually, we can converge, and we can do more together. But of course, it's up to the BRSA just to standardize that practice. Actually, we are ready, even though there will be some small issues, and we would like to maybe recalculate some of the accounting items and recalculate, and we need maybe new trial balance for accounting standards. Even though it will take time, some time, we definitely can comply, and we can go with the AOFI standards, I believe. Thank you very much.
Thank you, Dr. Albayrak. Also, you used your time very good. Your approach is very important. You say that convergence is to be taken. If we compare the relationship of AOFI with Turkish regulation, we can look at the relationship between IFRS and local generally accepted accounting principles. They started it with harmonization, but later they passed to convergence. Now US GAAP and IFRS are making convergence. Similar to this, making an analogy, Turkish regulation can make a convergence between Turkish regulation and Aofe standards. And your recommendation to make guidelines is a very good idea. Instead of making standards for each and every issue done by Aofe, Turkish Central Advisory Board can make some guidelines, as you mentioned. It is a good idea. Now I will give the floor to representative of Aofe. He is chairman of the Aofe Governance Board, Mr. Faruk Rıza. Welcome to Turkey. Let's say you are not physically in Turkey, but we are in organizing in Turkey. I wish you to touch upon importance of having a dedicated Islamic finance regulatory framework, and also impact of similar approach in other jurisdictions, and if possible, Turkey's role in international Islamic finance industry and cross-border opportunities in its emerging economy. Role of Aofe standards in harnessing market growth opportunities, if you touch upon, will be valuable. You have 10 minutes, please. The floor is yours, Mr. Faruk Rıza, brother.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much, Professor Shansoy. You said, welcome to Turkey, and I'm not in Turkey. Well, I am actually, because my heart has always been in Turkey. And, my friends, from Turkey, they know that very well. And, I have my very good friend, Dr. Ahmed Al-Bayrak also. So he will testify. And, I'm also very frequently in Istanbul. I was there just a couple of weeks ago, and I'll be there in a couple of weeks again. So it's good, it's great pleasure for me to be sharing. I think, my little story about Turkey, I would say. For the last, I think about 15 years, I have been a very, keen observer on, Turkish participation finance sector, and mainly banking, of course. So I have actually witnessed from, where there were just a few banks, they were very small at that time. And I remember those days when I will see, a branch of one of, the participation banks every few miles in Istanbul, and outside Istanbul, it was actually not very much visible. To a point where we have come today, where I have seen actually in many, busy streets in Istanbul, where in one street, there are like, multiple branches of, Turkish participation banks, and sometimes, more than one branch of the same bank, in one street. And this shows me actually that how busy they have become and how mainstream participation banking has become. The market share mentioned as 7.5%, it's, maybe it sounds small, but the reality is that having seen this journey over the last 15 years, I believe that this is a great accomplishment. And the participation banks are on a trajectory to be, inshallah, a very significant player in the Turkish economic development, and also, offering opportunities to, the Turkish public and also the Turkish businesses. But more important for me is actually what is coming next. So I will touch upon that, in a few minutes time. But let me tell you my experience across the board. I consider myself, being highly blessed by Allah subhanahu wa ta'ala, of having the opportunity of visiting and working in, many different jurisdictions, and working for, a number of governments and regulators, and have seen actually a lot of these regulatory frameworks and, the governance frameworks. And I have been actually part of, many teams that have developed these frameworks, for different jurisdictions. So I can tell you that what I have seen, since this morning, all the presentations that have been done, it's actually very pleasing to see that a lot of work has been done in Turkey. And, like in many other countries where we have seen, Islamic finance becoming very big, becoming significant, and becoming mainstream, we observe this one common factor, that there is actually a centralized approach where, there is a dedicated and holistic type of, regulatory framework for Islamic financial sector, and, there's different subsectors, etc. So, we have seen this happening. Brother Omar Ansari, he mentioned Oman. With I think like 5 or 6 years of history, they have actually managed to achieve 15% of their market share. And that country, from the very beginning adopted, Aofe Sharia standards. So we have seen this, and, they have a very good, Islamic banking regulatory framework as well. We have seen, the example of Indonesia also. Indonesian model, I think, of Sharia governance is actually very much similar to the Turkish, because they are not adopting, Aofe standards per se, but they have their own, central Sharia board, and this central Sharia board is actually, taking the Aofe standards and then adjusting them, to meet their local requirements that are slightly different, from, other countries. And this is very much understandable, because each country is different. There is a history, there is, a different culture. The religious fabric of the country may be slightly different. There may be some legacy issues. There may be, some challenges. And also, the interpretation of Sharia, or the school of jurisprudence, Islamic jurisprudence that is being followed, may be also different. So, we have to have a little bit of flexibility to make sure that we respond to the exact needs of each market, and hence, this model that is working in several countries, including Turkey, where Aofe standards, they serve as the basis, but then there is a little bit of adjustment done to meet the local requirements. So these countries like Indonesia, Oman, and many others have done actually very well, and Islamic finance industry is growing very fast, and is becoming very significant contributor to the economic development of the country and its population. Now let's come back to the opportunities in Turkey. I believe that so far great work has been done in Turkey. The work from BDDK, TKBB, and all other stakeholders, I think is really significant, and we really appreciate as observers. However, I believe that given the opportunities that I can see for Turkey, and I'm sure that the Turkish authorities and the stakeholders will be able to see even better than I do, is that Turkey is assuming a much bigger role in the region and in the Muslim world. And being a G20 economy, I believe that there are great opportunities coming around, for Turkish, finance sector and other sectors as well. And this is where I believe it becomes very important. I think Dr. Ahmed Al-Bayrak, he already mentioned on this point that I believe so far, because the Turkish participation banks were mainly working, with the domestic market, I think it was okay, to have something of, their own. This Central Sharia board, or the advisory board is providing the standards and so on. This is great work, it can continue, but I think you have to start thinking now probably for the next step, and the next level of participation sector, where it is going and what are the opportunities. I believe with this fast changing world and the opportunities emerging, I can see that there will be a lot of cross-border transactions between Turkey and other countries, and I'm, obviously the whole world is open, but I'm primarily seeing this business, coming from CIS region and also Africa. Now here, I think we need to be, a bit more, probably innovative to see that whether we can continue with the same practices that we have had for many years, or do we need to look at different things. So CIS region is very much of the same, or similar cultural background and religious background as Turkey. So the majority school followed is Hanafi. So of course, there will be a lot of, there will be almost the same interpretation of Sharia. However, when it comes to Africa, I have worked a lot in a lot of African markets, and I can tell you that the majority of the madhab being followed in Africa is actually Maliki. right? And there may be differences between the interpretation of the Maliki madhab and the Hanafi madhab, and this is where it may become a little bit challenging. So what will happen now is that if there is actually an opportunity for convergence and a gradual harmonization, then it just becomes much easier for these cross-border transactions, and the opportunity to harness this growth, this growth for Turkey and also for many other developing countries, I think becomes much more achievable. And this is where I think standardization will be very helpful. And this is something that it's obviously it's not going to happen overnight, but this is something that is probably around the corner. And we need to start thinking now and preparing ourselves accordingly to make sure that we are geared for that time when it comes, so that we can easily execute and we can optimize this opportunity instead of either wasting the opportunity or struggling at that time that how do we do that and just panicking. So this is my view. And I believe that the work that has been done so far is great, mashallah. I totally understand the reasons that there are certain differences between the way standards are being done in Turkey and so on. But I still am very happy that there is actually a great similarity between Aofe and the Turkish standard so far. So it's a work in progress for me, and I think it will continue, inshallah. And I hope that today we will be able to take a few important points home, not for now, but maybe for our near future and beyond, inshallah. So
thank you. Thank you, Brother
case.
Farooq Reza. Also, you used your time very well. Now we will listen to the representative of Islamic International Rating Agency, Mr. Fahim Ahmed. Today we learned a sad news that you have positive in COVID, but you are looking very good and healthy. Hope it will not damage your health and will recover soon, inshallah. This issue of rating is also very critical for Islamic finance because of the fiduciary relationship. The risk of non-compliance Sharia risk in participation finance is very critical, and rating agencies as IIRA will assure the investors that the participation or Islamic finance institutions are complying with Sharia. This is an assurance we need. I hope Mr. Fahim Ahmed will touch upon linkages between credit ratings and fiduciary Sharia aspects. Also, Islamic financial institutions specific methodologies. I know they developed a methodology, and these are absent in credit rating agencies. The conventional credit rating agencies are missing the compliance issue, Sharia compliance issue. Therefore, Islamic rating is needed. The conventional rating agencies apply conventional banking rating criteria, while rating also Islamic financial institutions. Also, this is lacking something. For this, I guess Fahim Ahmed will touch upon how to convince regulators to enable ratings for Islamic financial institutions as a different asset class from the credit rating perspectives. Brother, Mr. Fahim Ahmed, the floor is yours. You have 10 minutes, please.
Thank you very much for good wishes. I would like to thank you, TKBB, Professor yourself, and other participants, my brothers and sisters. The only message I can give you is that I have been very careful, but when I got this last week, it is the experience which I can only go through COVID. Allah Kareem, that you all should stay safe. Please, at this age, I can urge, I can request, please wear your mask, take good food, because I know what I have gone through last 5 days. So I can only say things, the words, and words cannot express what I have gone through during night. So Allah Kareem, and thank you very much for everybody for good wishes, inshallah. The issue is, brother, why this is 1997, last century, when I got in contact with Dr. Ahmed Muhammad Ali of IDB, because I started my rating business in 1992, and then the Islamic finance came through Bahrain and then Middle East. So we started looking at it, and we were looking at the big three also. So we had opportunity of talking to IDB and all the stakeholders. The biggest issue is, you have seen a lot of failures in conventional banks, and some of these had been attributed to Lehman Brothers and to other very big banks of the corporate governance failure. We have yet to see a failure of an Islamic bank. Fortunately, we have not seen any failure, a big failure of Islamic bank where a Sharia failure can trigger a credit event. So the global rating agencies have completely ignored this area of commenting on Sharia, deliberately or not deliberately, because they have not experienced anything. But the regulators now look at our BDDK, where they just explained that they have a different contract on deposit holders, Wakala. Now, God forbid, if some bank goes under, then what would be the court look at? The distribution, the priority of the depositors. That is how the ratings are done. What are the bank ratings? Bank ratings are the senior most unsecured credit. So the regulations and the court rules and regulations in the global economies are very clear. The depositors are protected first, and on a priority, they have to be serviced first. But what about Islamic funds? So we have to understand this phenomena very intelligently. And while Turkey is making, I'm very happy. After 30 years of my experience in rating agency, I believe now in OIC countries, Turkey, Saudi Arabia, and your Indonesia, Malaysia, and Bahrain they have done their bit. They started this, they got the impetus, developed the debt markets. Bahrain did a very good job in putting up the regulations for the Islamic finance and hosting us. Thank you very much for, hosting AAOIFI and ERA and, other few infrastructure companies. I think Turkey could be one of the leading examples because they are the forefront economy in OIC. So the regulators have to be very cognizant of the fact that when they make these regulations under Article 3.3 of the vision of the economic on the 12th March, which was announced by the President Erdogan, that to protect, and where does this on the waterfall the depositors lie? Because then our ratings would be better. This is one issue. The other issue is that we cannot divorce Sharia and fiduciary and management quality, the Mudarib quality, with the credit ratings. In all the methodologies across all the other rating agencies where they are not Islamic, they don't provide IFI specific ratings, they have divorced this But as in the previous occasion, the CEO of ERA made a very good point on greenness. Look at the latest issues by Indonesia, all the global, they look at the greenness, that they make sure that their money goes to the green projects. Why are we not making sure that our sukuk, where we invest, why not S&P, Moody's and Fitch make sure that our sukuk money goes into the Sharia compliant and they regularly monitor this? Why they have made this regulation for the green ESG issues? So there is a line which they have drawn, and where they don't want to, for their convenience sake, they don't want to get into this because of the policy and maybe of the religious belief. So I think I can sell Quran very well, maybe easily, to our brothers and sisters to OIC countries. So I think this is my observation, and ERA's observation is that the regulatory support has to be enabled for participation, credit ratings along with Sharia. You cannot divorce both. As Professor, you said very well, that this compliance has to go hand in hand, because if the Sharia fails, there can be a run on the bank and the bank can go under. That would be a credit failure triggered by Sharia areas or fiduciary aspects. So I think, we started, the first methodology we produced was 2010, and Dr. Ahmad Muhammad Ali, Islamic development, God give him good health. He was personally involved and he promoted us. And now, mashallah, we are in 16 countries, more than 40 big banks we rate on the same standard. And thanks to AAOIFI for bringing this more greenness, more Sharia aspects into the rating ecosystem. So this was my submission, a little submission. We have been talking to regulators continuously in so many countries, Sudan, Pakistan, everywhere. And now we have just issued Faisal Bank specific ratings on this standard. However, we are doing our fiduciary ratings with commenting on Sharia, fiduciary aspects, the Mudarib quality and asset manager quality. So it's a very comprehensive experience we have. And we would like to thank you again, Professor, yourself and other speakers, for listening on this. And maybe the regulators can understand what ERA's point of view is on the ratings, going along with the Sharia and fiduciary aspects. Thank you very much, brothers and sisters.
Thank you, Mr. Fahim Ahmed. To mitigate Sharia non-compliance risk, Islamic rating is very significant, and regulators should be convinced, as you explained very clearly. Now we will listen to representative of Turkish Public Oversight and Accounting and Auditing Standards Agency, Mr. Samet Arslan. Samet Arslan will give us a brief about KGK, and he will touch upon the need for regulation, especially the relationship of KGK with Aofe, and he will talk about the current situation. KGK has promulgated standards for, they say, interest-free finance accounting standards. They don't say Islamic or participation, they say interest-free. And it is in effect starting with January 2020. I wonder, did any participation bank issued their financial statements abiding with the KGK interest-free accounting standards? And I wish Mr. Samet can make any comment about the implementation of these standards, why the participation banks are declining. They are not compulsory. To abide with these standards are voluntary. Maybe to be voluntary is an obstacle. Maybe it will be implemented if it was compulsory. I wish to hear about his comments. The floor is yours, brother, Mr. Samet Arslan. 10 minutes, please.
Thank you, Professor. Assalamu alaikum wa rahmatullahi wa barakatuh, and good day to everyone. And on behalf of the Public Oversight Accounting and Auditing Standards Authority of Turkey, the KGK, I would like to welcome and thank each and every one of you for attending today's webinar. My name is Samet Arslan, and I work as an expert and the coordinator of international relations in the KGK. I am also a member of the Aofe Accounting Board, as Brother Rizwan mentioned before. Before I get started, I would like to express my sincere appreciation to Aofe, the Participation Banks Association of Turkey, and the Islamic International Rating Agency for organizing this important event and for their valuable efforts. I want to start by giving you some brief information about the KGK, then move forward with the application of Aofe standards in Turkey. To ensure more effective auditing and public oversight system, the KGK was established in November 2011, and the KGK is responsible for achieving an effective public oversight system in Turkey. The KGK is also responsible for setting standards that ensure the preparation and auditing of financial statements in compliance with the international standards like IFRS and ISAs. And in order to establish a high quality and reliable financial reporting and auditing environment, the KGK has four main functions, which are setting accounting standards, setting auditing standards, authorizing and registering auditors and audit firms, and overseeing, inspecting, and enforcing their activities. So, as Professor Shensoy said, why we need for a regulation for the Islamic financial reporting. Actually, the absence of special regulations regarding the accounting and financial reporting of Islamic financial instruments in Turkey has created various issues. The most fundamental issues encountered are that the financial statements prepared by Islamic financial institutions cannot provide comparable, fair, and relevant information in accordance with industry-specific principles, and because of that, there is no unity of practice in this field. And in order to evaluate the issues encountered in the reporting of Islamic financial instruments and transactions and to find solutions within the framework of international practices, a working group was formed by the KGK in 2016 with the participation of relevant sector representatives. Professor Shensoy and Dr. Abdurrahman Çetin was also a member of that working group. This working group had several meetings. In these meetings, the controversial issues arising in the accounting and financial reporting of the Islamic financial transactions within the scope of IFRS, as we call Turkish financial reporting standards, and the importance of adopting an internationally accepted standard set were discussed. Actually, the discussion point was, would we create our own standard or accept the internationally accepted standard? Then, after evaluating the issues discussed at the aforementioned meetings, and to ensure that the Islamic financial institutions operating in Turkey to provide fair and relevant information in their financial statements, and to ensure the comparability of their financial statements, an agreement, a translation agreement was signed between the Aofe and the KGK in September 2017. And with this agreement, accounting, auditing, ethics and governance standards published by Aofe could be translated into the Turkish language and placed into Turkish legislation. Actually, it was aimed to bring all accounting, auditing, governance, and ethics standards published by Aofe into our legislation, but then it was considered that it would be more appropriate for the banking regulator, Banking Regulation and Supervision Agency, to take action on ethics and governance standards, which are within the scope of the copyright agreement, but not within the scope of the KGK's mandate. And by issuing the accounting and auditing standards, it was aimed to increase the quality of financial transactions related to the Islamic financial sector in our country and to raise awareness about these transactions by contributing to the development of the Islamic financial sector in our country. What we are now, what is the current situation, current status? At this point, many of the existing auditing and accounting standards, other than newly issued accounting standards and accounting standards regarding the Islamic insurance, are translated into Turkish language and they are issued in the official gazette. And the Islamic financial institutions, participation banks in our country can voluntarily apply them while preparing their financial statements. And as a professor asked, as for the mandatory implementation of the standards, if possible, I'm not sure if they will be mandatory or we will continue to apply them voluntarily. We are planning to determine a common date for the mandatory application, but before that, all parties must deem appropriate as a result of the negotiations between us, the KGK, the banking regulator, and the Participation Banks Association. Actually, Professor, as you mentioned, they have an application date starting from the 1 January 2020. The reason behind why our participation banks cannot apply them mandatorily, or as far as I know, there is no participation bank fully use those standards, AOFI standards. Some of them may use them in some documents to send their parent entities, parent banks. But up to my knowledge, as far as I know, none of the participation banks voluntarily apply a full set of IOFI standards, or as we called interest-free finance accounting standards. The reason behind this, I believe you should invest technically in human resources or many other things to make another financial reporting set other than IFRS, is because the banks, all banks, including participation banks, are mandatorily apply IFRSs in our country. And if they want to apply AOFI standards, they also prepare another set of financial reports, financial statements in our country. And I would like to say some words about the Islamic insurance standards. As we discussed the issue with our insurance regulator, and as you know, Islamic insurance in the global context is implemented in many different ways according to the local legislation of the countries. Although Islamic insurance is generally called tekaful, mutual insurance, or cooperative insurance, in our country, a new legislation has passed, and our insurance regulator encourages the participation insurers to apply corporation model. This is a different model than in other parts of the world. They also allow to apply other mutual insurance or cooperative insurance or tekaful, all types of tekaful models, but they issue and encourage to apply a corporation model, corporation Islamic insurance model.
Brother Samet, your time is almost over. You can conclude.
Oh, okay. Okay, Professor. And in this context, in the Islamic insurance, it is thought that the standards on Islamic insurance published by the Aofe, actually the former four standards, we are currently working for another new standard which is compatible with the IFRS 17. Those former standards will not be fully suitable for practice in our country since they only include certain models on Islamic insurance. And for this reason, it's planned to more up-to-date and country-specific standards in our country. Okay, Professor, thank you very much.
Thank you, brother, Mr. Samet. The organizer, Dr. Rizwan Malik, reminds me that we are 45 minutes behind the schedule, and therefore we should close the session. Therefore, I understand there is no time for questions and answers. Thank you for all the participants for their valuable comments. Looking forward to have another event in between Aofe and Turkish institutions. Assalamu alaikum to all.
Wa alaikum assalam. Thank you, Professor Najd. I think it has been a very interesting and enlightening discussion through this panel discussion, very well moderated by your kind self. My apologies to yourself and all the panelists for running a bit late in the show in general. So deep apologies, and I'm sorry that we could not entertain a lot of questions. But inshallah, we'll try and get those questions through emails and try and get back to them. And if possible, we'll probably reach out to yourselves as well to answer some of those questions. So I think with that, I'm very thankful to this panel, Professor Najd, to yourselves for moderating it very ably as usual. Brother Dr. Abdurrahman from BRSA, Dr. Ahmed Al-Barek for being the torchbearer for the private sector for today's session. Brother Farooq Raza, who shared his experience from the governance perspective and the need for it for the global industry, need for the standards, global standards for the industry. Mr. Fahim Ahmed from the rating side, as well as Brother Samit from the accounting side. And so I thank you so very much for this very enlightening discussion. Now to wrapping up the session very, very quickly, and for some concluding remarks, I would like to pass on the mic very briefly to our very able sister from TKBB, Sister Fatma, who's a manager at international relations at corporate communication, who shall basically deliver the concluding remarks. And I would also like to thank on behalf of Aofe to all our organizers, as well as to the participants who attended very patiently with us today. So thank you very much. Over to you, Sister Fatma.
Thank you, Brother Rizwan. Distinguished guests, all the participants, first of all, we are very delighted to have this organization with these discussions and very comprehensive market update about standardization, regulatory framework, and market experience for the standards. This organization really, very well accepted, and not just panelists and speakers. We are very happy also to see the participants from Q&A and chat box. It looks that this is a very good organization with a common collaboration. We answered more than 16 questions, considering this time limitation for Q&A sessions. For the more questions, please feel free to contact us. We will channel you to the right panelists. And just a very brief summary, very important remarks. Today we have very fresh update about the issue at economic reform package from Mr. Shekin about participation finance law. Yes, we got some details about the scope, objective, and features of the law. We are awaiting for the final version of the law. Then we got very detailed information about Central Advisory Board from Professor Hassan, and he took many questions from Q&A session. So this is very good opportunity for us also to communicate about Central Advisory Board. And also after that, our supportive institutions, of course, Aofe and also Islamic International Rating Agency, very good opportunity to give a panoramic view about those institutions, their functions, activities, about both the participants in Turkey and international network. All the presentations frequently asked by the participants. We will be also sharing all the presentation. And also from the panel, I should also emphasize that from their experience, from their also studies and activities, all the details about standardization and regulatory framework shared with us. And also it is very good hearing that and also in Kuwait, we heard that how the institutions are engaged with the standards of Aofe. So this is very good assurance that Turkey also actively following as a guidance Aofe standards. And also when you see the profile of our respected panelists, they are also actively working at the committees of Aofe. So by ending my closing remarks, sincere thanks to all Aofe and Aofe team and also URA for making this organization happen. And also, of course, again, sincere thanks to all the panelists to have such lucrative discussions about the final situation and update of standardization and regulatory framework. Thank you very much for all you.
Thank you very much. Well, we'll take a quick picture. While you're waving, we'll take a quick picture. Thank you very much. I think
thank you.
Really, thank you, inshallah. I look forward to keeping in touch and speaking to all of you soon, inshallah.
Best wishes to all.
Thank you very much.
Thank you.
Thank you.
Assalamu alaikum.
Slow recovery to Mr. Fahim Ahmed.
Professor Sensoy, inshallah, we will be seeing you very soon. Keep us in your duas. Thank you. Assalamu alaikum.
Thank you. Alaikum assalam.